screw up, I know where to find you because I have your email address. But I recorded a couple different ways. So we're going to go ahead and kick it off. I know more people will join based upon history of the number that signed up versus the number that are here right now. But those who've been here before know that I start my talks with background for about 10 minutes before we go into everything. So welcome and thanks for joining. It is January 31st and it's a new year. Last year was phenomenal and hopefully you all had good years. I do these types of programs fairly frequently. Um, yes, I have something to sell, but trust me, this isn't a selling webinar. Um, I've been doing these types of programs for a long time, and having something I can actually sell makes it doubly rewarding because I like to teach, and I think we built a nice tool. But this isn't about selling. This is about teaching. And so my goal today is to do much more than I can do on a weekend video or a nighttime video. Not as much as you get in a 3-day live meeting, but to really go back a little bit. Yes, Joel, I pressed record. Thank you. But to go back and look at where a lot of these things came from. So I'm going to kick off with a little bit of background about who I am, what I do, and um, review my performance for last year. I think we all, well, I can't say we all. Everybody I know that I've talked to took some heat the last couple of days. January's over. I had a decent January. Um, I commented on some of my nightly videos that February wasn't kind to me last year, so I lightened up some. And that was probably a good thing to do. Plus, there was a signal on Wednesday that I know William saw because he commented about it on the YouTube video. But I'm going to start off with who I am, what I do. Then I am going to spend probably 40 minutes on some of the best things that Ian taught me. And Ian really is the key to my success. And then I'm going to go through the various programs. I will tell you whether you've bought the Metastock program, whether you've bought my Market MRI Pro, whether you've done this all on your own, whether you're using HGSI, all that's good. I trade exactly the same way. And the reason we created Market MRI Pro was purely for the scanning. And we'll talk about that at some point as well. I'm going to finish after after the break of looking at how I look at options. I think that options are intentionally made to sound difficult so people can charge lots of money to teach you how to trade. I really do. I think options are simple. And if you do the strategies that you're comfortable with, it's probably safe. But the Options Industry Council obviously talks about the risk, and there is risk, but the risk is typically going naked. And I'm not talking the physical nakedness, I'm talking naked options, but we'll talk about that. So let's kick it off. So again, my name is Jeffrey Scott. I am a board certified oncologist, which means I've got training in internal medicine. You have to have those boards, and then I have medical oncology boards. Email address marketmripro@gmail.com. Hopefully you're all part of Top Down Trader. If you are and you decided to buy the tool, you get an extra $100 off. And if you're not, you still have time to join. And then the website, which will never be incredible because it's not who I am, is Market MRI Pro. And what I mean, it's not who I am. I'm 68 years old. I'm not. Websites are great and all that stuff, but I don't know if I'll ever figure that out. Disclaimer: like everything I do, this is for educational purposes only. Anything I talk about, if I name any stocks, should just be considered education and not investment advice. I'll turn off that bleep. That is unfortunately Discord. Well, I'll turn off the bleep when I can get to it. So I have to get out of this. The intent of the video is to show you how to use my tools. Trading involves risk. You'll are solely responsible for any decisions you make. Obviously, trading stocks and options should be considered risky. You should always consult your financial advisor before making trades. I will discuss how I approach options, as I just mentioned. Um, I have been trading options for 30 years. I paid a lot of money to get educated on options, and you have to understand the risks. And the Options Industry Council, I don't know if it's not for profit. I think it's not for profit. I think it's attached to something that is for profit. But the Options Industry Council has a website, and you don't have to pay for their education. They're just going to give it to you. So it's a great place to go if you're still learning about options. Um, I've been posting videos on YouTube forever, and I try and post them every night, especially if the market is doing something. All you got to do is either put in Jeffrey, Scott, and stocks and look at the much younger me, because I've been doing this since probably since the turn of the century. So I was in my 40s at that picture, I suspect. Time to make it realistic. And then, or just at JAS Cancer Doc to find them. No charge. I really don't charge for anything. The technology requires me buying data and having a programmer and a support team. I have to charge for that. And when I do a live meeting, as anybody that's attended can attest, I either do a cheap meeting where you get no frills, but it's really cheap, or I do an expensive meeting where I wine you and dine you, take you to Capital Grill or on my boat for dinner, and that meeting's more expensive. My goal is to break even on my meetings. The top-down trader group, I don't keep a mailing list, so this is what I use to let people know when I post a video or if I'm doing an event like today. And just go to Google Groups, you sign in, click all groups, look for top-down trader without the hyphen, connect your Google profile, and then tell me how to contact you. Is it a digest once a day? Is it every email? I purposefully now block all new folks for a week or two, uh, or until they post something, because it turns out there are AI bots that join and then try and spam us. And that's the way I prevent that. So let me deal with that before I open it up. But if you post something and it's your first post, I'll look at it. And if it's a legitimate post, I'll take you off moderation and you're free to go. As I mentioned, I'm a cancer doc. I've been in the market since the 90s, early 90s. I actually quit practicing in 2001 and became, I guess, a healthcare entrepreneur. I've had multiple healthcare startups. I've sold two to Cencora, which used to be called AmerisourceBergen. Sold one to Cardinal Health. We sold one to Magellan Health. We sold one a long time ago to Express Scripts. Both of those companies, Express and Magellan, have been acquired. And my latest one will hopefully exit so I can retire and do this full time in the next 12 months. Um, but we have 3,000 employees. I'm not just an administrator, I actually operate one of the divisions, so I work full time. So I can't sit at my monitors all day and trade. And I don't like to have charts on my monitor at work, because that's like telling um, my employees it's okay to do your hobby while you're supposed to be working for me. And my office is on the water, so everything's glass. I've got the windows looking at the water, but I don't have a wall between me and the hallway. It's glass, so it's a fishbowl. So, and I've been trying to help people trade for a long time. In medicine, it's see one, do one, teach one, and I had some great mentors, and this is payback, basically. I'm still doing cancer research. This was a publication I did in one of our key journals back 2 years ago, and I was really proud because it made it to the best of edition. But more importantly, it kept my mom happy, because Jewish mother, kid gets her dream, kid becomes a doctor, and I quit practicing, so she'll never forgive me. Um, my success in the markets goes back to this guy here, Ian Woodward. I met Ian in, I think, the early 90s. I don't think it was the late 80s. There was a company that doesn't exist called Telescan, no relationship to Telecharts or Warden. And they were the first online trading program. It was outstanding. And he was a guest lecturer for them. And I went to one of their big meetings and he was speaking. And then a few months later, I had an email that this guy, Ian Woodward, was going to speak in Atlanta for a seminar where I practiced, and I went and listened. And I mean, if you could fall in love with an idea in a way that somebody presented it, I fell in love. And again, in the metaphysical sense of in his teachings. And I became a follower. Ian talked about how he worked at Xerox his whole life. And when he retired, he had a lot of Xerox stock. And he thought he'd just leave it in Xerox. And that somebody educated him about the risk of being overweighted in a company, and so he started listening on the radio and following some guy named William O'Neill, and the guy from Cancelim and IBD. And then Ian, being an engineer, didn't just take everything that O'Neill said as fact, tested it, and I think he improved it. So a lot of what he did and a lot of what I use and what we'll talk about today is what Ian taught us and came from what he learned from O'Neill. And like I said, I think he improved it. Now, I didn't stop at Ian. I've spent money with anything that you get an email on. I've probably paid for it. I've got every program on the market. I read a lot. I go to seminars. And then my trading style is I'm a mutt. I've had the opportunity to learn from a lot of smart people. You smush it together, and that's what I am. And when you look at Market MRI or any of the tools I use, and again, you can do a lot of what I do in other platforms without buying any of my stuff. It's Ian. I've tried to encompass what I learned from Ian and then improve with some of the other folks I've met along the years. Another reason why I don't want to sit all day at my computers. She just went home, but she spent the night, and we were watching Peppa the Pig this morning as I was getting ready. But I have grandkids, and they're the love of the life. I mean, I always like to call out folks that really impacted in my trading journey. And this is Ian. And so Ian was an elderly man when I met him. And, I probably got to benefit from him for about 15 or 18 years before he passed. And it was funny how many physicians were in the room. One of his last live meetings, he passed out when he was sitting on a chair, and it was like the whole room was full of physicians. What a phenomenal person. Ron Brown is the other. Woodward and Brown was the name of their company. Ron was a audience member like the rest of us, who had the joy of partnering with Ian and doing a lot of things together. Some congruence in what they did, but Ron's really become a fan of volume spread analysis. He even brought Anna Cooling online, who wrote one of the good books, I think that's her last name, to one of Ian's meetings. We'll talk about Ian a lot. O'Neill, I mean, if anybody on this call hasn't read How to Make Money in Stocks, not only are you missing out, but you're probably missing a lot of things. I mean, a lot of what I do, a lot of trading stocks, just the basics. And even though it's the basics, I still read it every year because I learn every time. And then we've got Morales and Katcher, who used to, well, so many people used to actually work for O'Neill. And they've written some number of books, and sometimes they're critical of Cancelim and critical of the folks that just stick to one brand and don't expand. And when we talk about big gaps and big volume, pocket pivot volume, they have a number of things that they brought to market. Some of the smartest guys you'll ever meet. In fact, Chris Katcher probably is Mensa level rocket scientist, and he's a concert pianist. In his research in college and grad school, he was involved in the naming and discovery of three elements in the periodic table. Go figure that one. Um, Interesting guy. You're going to see a theme here that a lot of my biggest influences are dead. David Elliott, this is a guy who used to do webinars like I do. We do live webinars instead of YouTube videos. When we talk about breakouts, I use his type of breakout, which is called a Bobo breakout. But He passed away a few years back, gave of his time all the time, as did Stephen Bigelow, did frequent live webinars. So I learned candlesticks from. And I think candlesticks to me are the only way I look at a chart. Keith Wade has got me thinking the HA candles, and I play with those, but I like candlesticks, regular candlesticks. Minervini, interesting guy, expensive meetings, expensive annual product he has, but a really successful trader. I don't know if he worked for O'Neill, but he certainly grew out of the O'Neill camp. John Person, no relationship to any of the O'Neill stuff. John is friend, kind of a neighbor down here. We couples get together all the time. He also professionally manages money. He's invented his own indicators. He's had his own futures brokerage. He's an author, brilliant trader. Some of you got his beta version, which we're improving it and we'll launch it, his own version of our tool set sometime soon to the broader audience. Van Tharp, another no longer with us, wrote really big books on the mind and money management. Highly suggest you read some of his work. Mark Douglas, God, he was too young. Another one that passed away, he really was about the psychology of trading. And, if you don't think it's real, think about the things you held on to Thursday and Friday that you knew had already topped. If you don't think it's real, try trading when you're not feeling good or you're having a fight with your wife or you just lost your job. The things that go on in our world and our day-to-day really influence our success or failure at trading. And I can't forget two good friends, George Lee, may he rest in peace, kind of like me, a mutt. He picked up things from a lot of other people, and he was a great, great teacher, great from the podium, a huge following. In fact, the Southern California meeting that we try and do every year was his meeting. Him passing, we decided to honor his memory by continuing the meeting. And then Sagar from Superior Profit. And people ask me, do I use other people's stuff all the time? I go, yeah, I do. I think Sagar's tools are incredible. And I use John's all the time. And gosh, the whole Kansliv and Ian family is the whole nexus of what I do. So I'm a top-down trader. We're going to talk a lot about top-down today. I'm a swing to position. What does that mean? It means I enter a trade to swing. I'm doing mostly options at entry. I'll convert many of them to shares at some point. A deep in the money option, meaning if the current price of the stock is $50 and I buy a $35 option, there's almost no time premium. I'm probably going to pay $15.30, $15.50 to control a share of a $50 stock for a couple of months. So I'll do deep in the money calls just so I have less capital expended. But we'll talk about those as we go. So I'll start the trade hoping that it's going to work. And then I'll continue to be in that trade as long as I can. And some of your best trades will be trades that you never get stopped out of and they turn into a position. I have multiple accounts. Be very clear. And you'll see a slide that says that. I manage today one dinky account. It's not dinky to you, it's dinky to me. All my other accounts are professionally managed because I'm in exit time of my company and I don't have time to worry about my money. I'm more worried about getting rid of the company. And so that's a little bit different how I historically have been than I am today. So when I show you the performance of last year, it was the only account I did that had more than one trade in it. I have a small account TradeStation just to keep the data free, and I closed half of my Summit position at one point. That was the only trade in that account. I don't count that in. So I use daily and weekly charts. That's why that's what we start with in Market MRI Pro. However, you can do minute charts if you want to, for whatever reason. I use indicators and scans to find setups. I use price and volume to tell me what to buy and support and resistance. But I find the list with indicators and scans. Equities and equity options. My A trade, I want to stock in an uptrend. I want to pull back to support, and I want to buy it on momentum off of support. I want to use rules-based position sizing and stop management, money management, and I want seasonality if I can get it. Seasonality is secondary. I think the golden age of seasonality may be over. That's just my opinion. Um, as I see a lot less of those it works all the time scenarios. I'll show you the tools I do it for 30 minutes a night, and I haven't changed my approach in 30 years. The tools that I use make it easier. Um, if you don't believe the 30 minutes, just watch last night's video. It was 40 minutes, but how much did I talk because of you guys instead of just get my work done? And I really can get it down to 30 minutes. Of course, now that I do videos every night, you got to add an hour for doing the video and posting it, etc. Does this trading work? And I think every time you listen to somebody new, you're testing out a new person to see, do they actually trade real money? And do they have any performance that gives you confidence and that you should pay attention? Now, I've never before last year showed you my financial results. I let my videos speak for themselves. Look at my April 7th video when I called the bottom. On Wednesday, I showed you a shooting star on the Russell, and I showed you, or not on the Russell, I can't remember which one now, and I showed you the high jump was at 100%, that it was going to come down. I've had some great stock calls, but just go back and look. That's how I don't post my financials. I tell you what I'm thinking every day on my webinars or the videos I post, and I call direction. It's archived on YouTube. And as I'm going to just review last year's results, and many of you have seen it already, you don't have to trust it, and you shouldn't trust it. You should go back and review for yourself to see if I have any knowledge of what I'm talking about. And there's more to performance than being right on market direction and instrument. You got to have that trading plan. What are you going to trade? What's your stop? What's your target? How much are you going to buy? And, I have a 30, gosh, he's almost 38-year-old son, and he was freaking out because his account got clobbered the last couple of days. And I'm just laughing at him. One, because he doesn't have that much capital. So 10% on a small amount of money was still a small amount of money. I don't even know if he looks at charts. And it just kills me, but I'm working on them. There's no guarantee or warranty that anything that I do will give you the same results for what anybody else does. Now, I love this. I love this because I have it documented. I did a video on April 7th. I said the bottom was in. I'm going to show you why I did that today. And why is that important? Because I make the most money off of a bottom, period. You look at 2009, March, March 9th. You look at 2020, end of March. You look at April 7th of 2025. Those were probably the 3 years where I had big triple-digit returns. It wasn't anything different in how I traded. It was because I played a bottom. And the same tools that I use are available to you in this program. So 2025, I typically manage all my money or a big portion of it. So I would have accounts with 7 or 8 figures. But as I told you, my business is getting close to an exit, so I wanted to concentrate on that, which is my biggest investment. I also had a major health scare in 24, so I wanted to focus on my health. But I was able to leverage that to get a boat. I got grandkids, so I simplified my life. Most of my money is managed by professionals. And I started with a $150,000 account in 2025. And I know that that's not a small account for everybody. It was a small account for me. Just like my son's account, thank God, is a small account for him. And I limited the margin I would take. and I was going to trade just the picks from my weekend and midweek videos, and I was going to follow the market calls that I talked about. I doubled the account by the end of June, and then I had pre-planned that if I could double the account, then I'd pull 500,000 away from the pros and stick it in the account. And this is how the account performed. Just go back and look at the old videos. It's the same account, and you could see from January 1st to 12/31 of 2025. So that's a year. I was up 180.57. You'll notice I started strong in January, just like this year. I pulled back on my equity curve, which I hate, but it happens. And then from the bottom of the market, you had almost a straight line until the beginning of October. And then I pulled back a little bit into the end of the year. Sure, if I was smart, I would have just taken my money out at the middle of October, but that's not how I do it. And it's the ebb and flow of the market. Now, if you look at 6 months from April 8th, the day after I called the bottom, until October 8th, 6 months to the day, it was up 465%. Or if you did the math, I think it's 77 point something percent per month. There is a slide that I'm going to show you that talks about 100% per month return. People think that's impossible. It's not impossible. Question about my drawdown. I don't think I ever drew down more than 12%, except probably in February from the top to the bottom before I started going higher. I'm willing to accept a drawdown. I trust the process. I also get smarter every year. Like, for example, one of the picks that I gave you not too long ago was HWM when defense was turning up. And then we talked on the videos, or I talked on the videos that, defense was pulling back. Well, HWM did as well. Well, I bought it when it was around 200. I bought 200 calls. And the stock popped up right away, went to 210, 212. It ran all the way up to 2.25 plus. When I get a run like that, I buy a put. So I bought puts on HWM at 225, and I sold. I'm just looking at my account right here, and I sold a $240 call against it. And my calls that I entered the position with, their value came down, while the put went up in value, positive for me, and the call went to zero that I sold, which means the money went to me. So I protected the value of that trade by selling premium, buying premium, and netting them out pretty close to each other. And I sleep at night much better. What's the cost of that? Well, if it keeps going up, I'm going to make less profit, because even if that call never gets hit at 240, that put will become worthless. So I don't keep the puts forever unless it makes sense. So this is perfect return. There's no drawdown of more than 3 or 4% that happened this period of time. Is it because I'm a great trader? Hell no, I'm a human being. We all make mistakes. It's because, as Ian would say, when the wind is at your back, you attack. And the wind is at your back when you get a major low in the market. So I did use options for leverage. I like low-cost stock alternatives, spreads with limited downside risk, which we're going to talk about today. Judicious use of margin. If I do a synthetic where I buy a call and sell a put at the same strike price, I'm going to get into that investment at pretty much plus or minus $1 a share. And most of the time, it's going to be pretty close to zero. But I'm going to buy a protective put underneath that synthetic so I don't have maximum loss issues. The broker is going to look at that spread between the short put and the long put, which is my risk, of capital, and they're going to charge some margin against that, even if I have plenty of cash in my account. So I can't help the use of that margin. I'm going to avoid big losses. That's how I design my spreads. I don't chase shiny objects. Boy, was silver a shiny object or what? And scaling up and down my reserve on cash on market conditions. I have a trading plan. I want pullbacks and uptrend, my A trade. I want 2 Momo dots, my A plus trade. And I want weekly HCD setups, which is John Person's gift to humanity. And we'll talk about that at some point. His trade. I mean, I bought everything he's ever sold so I can find them and trade them. But those are the 3 trades that make me money. I keep position size and stock management on options the same as stocks. I made some mistakes growing up. I could control a lot for a little, but that also means you have a lot of risk if you don't know what you're doing. No revenge trading. I'm really bad at that. I'm not bad at revenge trading. I'm bad at getting back into something that I didn't do well in. And I wish I could take out the names and the tickers and not know what I'm trading. I'd be much better because I have a bad memory. And sometimes it keeps me out of things I should get into. I have a good memory, which is bad. I roll my winners up and out. How do I hold an option for a long time? Well, I keep rolling it. I roll the strike price up, which means I'm putting money in the bank, and I push the date out, which gives me more time. And we'll talk about that in the last section. And I don't do FOMO buys during work time. I get an email, buy this. Well, I'm not going to, unless I have time to go down, sit down, look at my Market MRI Pro chart, look at the fundamentals, which I care about, and look at when earnings are coming. I'm not buying it because somebody sent me an email that this looks great. And then I did see some benefits of trading smaller, which was I slept better. I didn't get up looking at futures and less anxiety at earnings season. Thank God, because this earnings season's been a bear. Um, and I want more time for this stuff. I got an amazing wife who I met on a blind date and proposed 2 days later. And we've been married for 40 years. That was my gut before Manjaro. Thank goodness I've lost a lot of weight on Lily's drug. She weighs 100 pounds. This is my boat. It's called Stocks and Docks. And living in South Florida, being a 2-hour jaunt to the Bahamas, it's good to have a boat. I already told you about my grandkids, and even though he's left with disgrace, and I'll always keep him there because I had a legitimate health problem. It's not going to impact on the rest of my life, but I had a big health problem. I had major surgery. I'd never been cut before, and I was having surgery at Friday morning. And Wednesday night, I took my biggest customer in New York out to dinner, and my wife thinks I'm an idiot because what happens if I can't get back from my surgery? And so we fly out of Teterboro, which is the private airport in New York City that I like to use. And I was sitting waiting for the captain to let me board. And I watched all these Michigan people walk in. And then Sharon Moore was just announced the coach. And he sat down next to me and I talked a little bit, told him I was a Michigan alumnus and da 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 da. And then told him about what was going on. And he gave me the locker room pep talk before my surgery, which I thought was really cool. Now, I have my stuff is in a lot of platforms, and some are not mine. Ian is the brains behind the tools in HDSI. HDSI is an older program. It is as powerful for end of day as anything in the market I've ever seen. It's just a big learning curve. Much of what I do is already built in. I actually paid to build in John's Person's tool set into there as well. I love it. I use it every day. It is a core piece of what I do, but it's not my primary program. My primary program is the Market MRI Pro. It's available now month to month. And you just go to highgrowstock.com and you could read about it. TradeStation, TradeStation's got a lot of benefits. You can trade off of it. It's relatively inexpensive or free. Lots of people will sell you indicators for it. I'll sell you my package. I've got a great scanner for it. You can build the timing model. You can build the market breadth. And then these are my two favorites, Sagar and John Person. It's like the only program we're going to see both of them saying yes. Of course, expensive and expensive. Well, everything is relative. Um, I built an app with my partner Van that combines these two with my stuff, and it's really cool. But you got to have Sagar stuff to do it. TradingView, their scanner's getting better, but to me, it's still a work in progress. I have my indicators for that. Metastock just launched a product. I'm not happy with the top-down piece going from sectors to industry groups, and it doesn't have all my stuff built in, but it has Sagar stuff. And if you trade Indian or Australian markets, if you want a real-time streaming data feed, it's an awesome program. And then we're going to show you a lot about my program, and John Person's stuff will be available shortly. I really think highly of Sagar, and I haven't tried to sell you anything yet. And I'm already telling you his website, superiorprofit.co and johnspersonsplanet.net. So, and I'll give you these slides. I'll post them after we get done. So you all can have all that stuff. The Metastock, there's a lot of advantages to it. And for those that bought it, that maybe I should have bought Market MRI Pro, the scanner piece of Market MRI Pro is now available or will be available shortly as a standalone. So if you want to use TradingView, if you want to use Metastock, the scanner part, and I'll show you what I'm talking about. We've now created a freestanding version. So I'm going to show you this slide 3 times. That's the only sell I'm going to do. People ask me, why am I not on Wealth 365 anymore? Well, I can probably tell you 3 reasons. One, because I developed my own platform, although I don't compete with Rob Hoffman. He's brilliant. 2, I don't have a big mailing list, and part of the reason he likes working with people is they invite all their colleagues, and more people end up with the program, which is fine, makes total sense to me. And 3, I'm not good at selling this stuff. Oh, I could care less. If you want it, that's wonderful. I want to make money for Praveen. This is secondary to me, but I think it's a great package. It's $26.95. Yes, the price has gone up. I warned everybody last year. Everything's gone up, and if you look at the package today versus when we launched it in May, it's a big difference. The TradingView indicators are $5.95. I've packaged together those, a Jumpstart webinar, which I'll do on the week of the 10th. Just got to see which day my wife isn't going to get mad at me. And the price is $19.95 through February 9th. Annually, it's going to be $4.95, and I'll try to keep it there. The more users I have, the more likely I keep it there. If I don't have enough users and the data prices go crazy, well, the cost will go up. Now, if you go and sign up for Top Down Trader or you already are part, you get another $100 off. If you bought my marketplace package for wealth charts or Van's and my TradeStation app, 200 each. So if you have all this stuff, it's back down to $14.95. But I've got to push my average selling cost up or I can't afford the program to maintain it. So that's the deal. And I know people, you know what? And I'll put the Metastock thing too. If you have the Metastock, I'll give you $200 off as well. My key principles over 30 years of trading, top down works best for me. Let the market direction, which the market direction determines most of the movement, so trade in the direction of the markets. Leading industries lead longer than you expect, right? Look at silver and gold. It actually counts as an industry to me. Who thought they'd go up like this? Look at all the data center things. They're leading a long time. I don't think they're going to stop. I think they're going to get ugly pullbacks. But just look at APP. You want to see a land of ugly pullbacks? It did what it does what it did Friday all the time. Yet it keeps going higher and higher and higher. It's part of trading. The biggest money is made holding positions over a longer period of time. The cool thing about crossing over to the educator side of the business is I get to have conversations with a lot of people that I've had followed over the years. And what have I learned is they all like to sell futures related stuff because that's what people want to buy, and futures education and live trading rooms. But they make all their money in their long-term position accounts and their swing trading stock accounts. So what does that tell you? You make more money holding positions over a longer period of time. Markets are never wrong, our opinions are, and I'm wrong a lot. The key is to recognize you're wrong and adjust your position. Don't dig in and be married to your opinions. Always use money management. I bet you my son has no idea what that even means. And, as silver was going up, I kept hearing people talk about it might be different this time because of the silver are involved in the components of a lot of the data center stuff. It's different this time. Folks, it is never different this time. Never different this time. When you start thinking that your own poop doesn't stink because everything you touch goes up, you got to start thinking it's not going to stay this way forever, and you start to take profits. I had silver, I had gold, I had a little heat from it on Friday. Very little. I had almost none left. I won't even talk about that I had anymore. I had pennies left because I wanted just to feel the experience. But every video I've done for the last week said taking profits, taking profits, taking profits. Because when it drops 30%, you're probably happier that you took some profits. I'm now going to jump into Ian's the portion of Ian. There is a video out Memorial Day 2025 where I decided to pay homage to Ian and some of the other folks that I learned so much to. And so I had this list of my favorite Ian teachings. And we're going to go over the ones that I use every day in my trading. We've already talked a little bit about top down. We'll talk some more about it. Ian resuscitated the Hindenburg omen from the junk pile. Very controversial. Not everybody believes in it. Trust me, you'll believe in it too when I get done. He put meaning in percent B. What's percent B? You have Bollinger Bands. You got a top and the bottom. Make the bottom 0 the top 100. Your percent B is where are you between the top and the bottom. If you're 0.5, you're right in the middle. If you're 0.9, you're at the top. If you're 0.1, you're at the bottom. And then you could be above the Bollinger Bands, 1.20, you're 20% above. Or you're below the Bollinger Bands, between 0 and 1. He created trading systems based upon percent B. John Bollinger didn't even figure this out, and he's the guy that created percent B. Ian's dancing indicators, the bingo, bongo, bango, very important. Eureka and Phoenix. We tried using math to create the O'Neillian follow-through day without having to think about O'Neill's, how he formulated it. So we will show you that. And then the high jump bar, which saves my bacon every day. Top-down investing. Don't play snakes and ladders with your retirement. If you know me, you've seen this before. You're playing with your grandchild now, and you roll and you hit 24. And, you hit 28. And you go all the way up to 84. And you feel like I'm almost there. I'm ready to retire. I just got 16 more points to go. And then you roll a 3 and you hit the snake head and you're back down to 24. For those of you in your 30s, like my son, you can play snakes and ladders or shoot some ladders with your retirement money. For those who are as old as I am, or 50 and above, you don't want to be losing your capital, because when March of 21 of 20 came in, I won't give his name out, but there's a kid, and he's a kid because his father used to go to the Ian meetings. That's where I met his father. We're going to call him a kid. He called me up right at the bottom, all freaked out because he had done really well in the markets and he had lost a lot of his and his parents' money, and he wanted to talk about the markets. And that was the bottom. Well, that guy actually works for one of the big trading gurus and has his own products in the market. But it just, even people that do this as a business, we go through this. But you can't lose, preservation of capital is what it matters. If you didn't have any money at the end of March in 2020, you missed probably the best rally of your life. So you got to have capital. So I'm always raising capital when I get nervous. Old slide. This is Ian's meeting, monthly meeting. I got to go a couple of times. God only wish we had the internet and Zoom at the time. But what he showed was smart people picking stocks when they retrospectively look back at performance, that if it was a strong market, they could double 106% return in 20 days. Now, what they found was if you held on to it, you actually reverted to the mean, and they were up only 78% in 2 months. In a weak market, they lost money, the same people that were great stock pickers and smart people. And unlike reversion to the mean in a strong market, if you're in a bear market and you're in a recession, don't hold your losers. Get out quick because they'll get worse. Now, you probably could say, but Jeff, how can you tell that it's a strong market or a weak, mixed strong or mixed weak? Yep, I agree with you. How can you tell? It's easy to know you're in a strong market. Everything you touch goes up. It's easy to know you're in a weak market. The mixed ones are a little harder. They've calculated this retrospectively. I think my tools can help you tell real time, and I'll tell you how I use that to calculate in my mind the market. Market context, the market's 50%, the industry group's 20 to 30, thus the world's best stock picker. And I'm sure they exist, the world's best stock pickers. It's only worth 20 to 30% of the price of what happens to the stock. Overall market determines my stance, long, short, or in cash. I am much better long and in cash. I am not good at short. I will use protection strategies like puts to protect me, but instead of shorting things, I typically buy contra ETFs. Some of you have accounts that don't allow you to go short. Well, contra ETF does the opposite of whatever you're measuring against, the index or an industry group. And you can buy it so it's 2 times, 3 times, 5 times, 20 times. And so you can buy things that go up when the market goes down. That's how I typically play a bad market. I look for my favorite setups in the top industries. That's top down. Bottoms up because I can't help myself. And different tools to say what's working. So here we go. Hindenburg Omen. You tell me if this is something. Scott. Can you comment on selling when you have realized gains? Do you let taxes drive and sell decisions? When I was younger and probably not as smart or as seasoned as I am today, I did let taxes dictate. I would hold on. I would hold on. I don't care. I do mostly options to enter, so it's all short-term gains. I don't care about taxes anymore. They work themselves out at the end. And I don't know anybody who is homeless that pays taxes. So paying taxes to me is a rite of passage. So no, they do not. Now, I'm not an idiot. If I have a big position and I'm very profitable and I'm 11 months in and I'm a little nervous, but I'd rather hold it, I might buy a put on it and sell a call. And, you know, just do that and then, either get called out after the year ends and I now have long-term gains, or if the market dives, I can still sell at the end of the year, but I have short-term gains on the put. All right, Hindenburg Omen, strong warning signal for a market top. Oh, also hint, white slide, these three things, this is an Ian slide. He gave me permission before he passed. A strong warning signal for a market top. The herd, where the herd is buying while the pros are selling. Claim to fame, and it's the same as it was when he did this slide. There has never been a significant stock market decline in history that was not preceded by a confirmed Hindenburg omen. Still the same. However, 75% are small corrections. Okay, if it said number 3, or 20% of the time it goes to new highs immediately, that would be a problem. That's not in here. In fact, if you look at an old slide, Ian looked at 20 years of Hindenburg omens, the number of signals in a cluster, the subsequent decline, and how long it took to bottom. 6 of the declines out of 23 were more than 25%. You don't see a negative decline. That means a gain. The market always went down at some point when that signal was still confirmed. And some of them were very short-lived, and some were awful. The components, number of new highs and lows, I don't know if I still follow the smaller these numbers is greater than 79. I've taken it out because I miss signals. The 10-week moving average is rising, the McClellan oscillator is negative, and the 52-week highs cannot be more than twice the 52-week lows. A confirmed omen occurs if a second or more triggers during a 36-day period from the first signal. So if I see a confirmed Hindenburg omen, I am going to start to change my approach. I am going to smaller positions, start to raise cash, and look closely at my other market timing signals. And here's why I went from a victim to a believer. I would sit at these meetings and, oh, he's this jolly old fella. And I didn't know if I bought into this thing called the Hindenburg omen. And everything in my life seems to revert around trips with my wife. So we're sitting in Paris in 2006, and the market's going higher, but my account is all over the place. Kind of like it's been the last week for many of you and I, even though we're at all-time highs. And this thing called the Hindenburg omen started firing so many signals. But I thought I was smarter than the market, and we got an 11% drop. Okay. The next time it happened, I'm sitting in Udaipur, India, which I just visited for the world's most over-the-top wedding. If you want to see what over-the-top is, Google Mantina, India wedding 2025. Oh my God, Jennifer Lopez was one of the entertainers and she wasn't the most well-known. Unbelievable, but the same place. I'm sitting in my room in the hotel and I'm watching, maybe I ought to pay attention. But nah, I wasn't heeding the signals. 14% drop. That is the beginning of 2007. Guess what happened here at the end of 2007? You're painting the chart. There were so many Hindenburgs. I paid attention. And looks what happened. You bet, Stacy. 2008 Black Swan, major market sell-off. Does it still work? Well, this was 2018. You didn't get any Hindies for years after the great financial crisis. Market's got to be extended. This is 2018, sold off. You'll get a spurious couple, but even a little sell-off. Again, 2018, bunch of them. The market sold off. 2019, they came in late. These are when the Hindis fired. The market was already selling off. But it would have kept you out of some of it. 2020. This is what's kind of funny to me. We didn't know about COVID, yet we were getting Hindenburg omens starting in the middle of January, painting the charts. And then we got the ultimate one 2 days after the top before the market sold off. You fine tune with your other signals. 22, end of 21, we had Hindenburg omens, more little sell off, little sell off. I don't even know if I called that. I don't think that one was confirmed. And then we had a bigger sell off with a confirmed. And then I asked the question, the NASDAQ has its own thing versus the NYSE. The NYSE has a lot of, I won't say junk, but they have bond funds, they have preferred shares. It's not all regular equity. And the other thing, it's got a lot of energy and banks. It doesn't have a lot of tech. And then the NASDAQ is kind of more reflective of what I do. Does the Hindi work here? So I actually did a study, and I believe the Hindenburg does the same thing in the NASDAQ as it does in the NYSE. Here are the NYSE signals. The red bands here, actually no, the red is the NYSE. The blacks are the NASDAQ signals, and I think it's an additive effect. So I now look for Hindenburg omens in both the NASDAQ and in the NYSE. Here are weekly charts from Wealth Charts, and I just painted on the Hindenburg omens in the top of 2021. Somewhere it says how many signals they had. The Hindenburg omen fired on 9 daily bars, and then the market dropped 37.5% in 46 weeks. That was the 21. In 24, the Hindi fired on 17, this is on the NASDAQ, daily bars. Was that telling us something? Well, yeah, it did. The market sold off. So I think the Hindi on the NASDAQ is meaningful. Therefore, we created this chart. Now, there's things on this chart you don't have. You could have it. I just added to the market breadth chart, and I've got a number for this coming later for you to make it yourself. I put my bongos, the high jump. I added in the 13-week new high, new low, because I think it's meaningful. So here's the April 7th low, but look what we had up here before the market sold off. These triangles, Hindenburg omens, more Hindenburg omens, and then that was on the NYSE, and we had them on the NASDAQ as well. So I'm a big fan of the Hindenburg omen. I don't leave home without it. And oh, by the way, late breaking news, as Ian used to say, confirmed Hindenburg omen right now, fired on Friday on the NYSE, and we've got confirmed Hindenburg omens on the NASDAQ. Am I selling everything and running to the hills? Not yet, but I sold some, and I'm getting more defensive. Any questions on the Hindenburg omen? Anybody think it's bullshit? Bad word, I apologize. Look, everything is to give you an edge. I think it gives me an edge. I rely on God, my wife, and everything else. I have to make sure and test him before I trust him. Jonathan, there's two answers. The question came out, great question. Does Metastock have the signal? Three answers. Answer number one, generically, Metastock does not have the signal, and it's not yet in my app. Answer number two, I have asked Metastock to hard code it and put it into my app, and the answer I got was they're checking on it. They don't know if all the components are in the LSEG. Answer number three is my good friend Sagar has coded it, and so if you buy his package, he has a tool called Market Breadth, and you have to have fire. Yes, James, it'll be recorded. Thanks for coming, James. He has his Market Breadth tool, and you can get the Hindenburg there. Do I buy market hedges at Hindies? I start with raising cash, Bazi. I don't like to buy hedges when my weekly timing model is still long. I raise cash and get much more defensive. I start buying hedges when my other signals start to fire. We're going to talk about percent B and 3-bucket skipping. These are we're going to talk about my timing and impulse signals. The percent B has become a very important part of my analysis. It is a major part of the momentum dot. Here I'm going to show you how it's a market timing tool. Bollinger gave us the Bollinger Bands. They are a volatility-based band. They get thicker or wider apart and closer together. When the market is quiet, squeezing, they're very close. In fact, the John Carter squeeze is the Bollinger Bands contracting within the Keltner channels. So if you look at the Bollinger Bands and you look over time, they are calculated so that 89% of stocks sit within the 2 standard deviations. So that means to me, 89% of the time, my stock is going to be within the Bollinger Bands. That means only 5.5% of the time should my stock be below or above. Now, if I told you that 80% of the S&P 500 were below their Bollinger Bands, is that an abnormality? Heck yes, it is. Why do you think I made my call on April 7th? When things that aren't supposed to happen start happening, it typically shows you an opportunity. So this is the premise of the buckets. If you start to have significant numbers of stocks above, you're getting overbought. Significant stocks below, you're getting oversold. How you use them is the art of trading. The kahuna, which is one of the 2 components in my momentum signal, and probably the dominant one. This one has to fire, and the second signal is to validate the direction. The kahuna says if 0% B is the bottom of the Bollinger Band, and 0.5% B is the top of the Bollinger Band, if you move more than 40% of this distance in one day, pay attention. That doesn't happen at all. Very rare. We actually backed it down to 24%. I get more signals, and I find they're also meaningful. Something that I learned, if I see multiple kahunas in a row, dual momentum signal. It's a really strong signal. So a big move of a stock within its Bollinger Bands on a given day is something to pay attention to. Now, a couple other things. In an uptrend, most of your stocks are going to live between the middle and the upper Bollinger Band. And in fact, they are going to go up, hit the upper band, they're going to pull back to the middle band, back to the upper band, down to the middle band, the normal ebb and flow. And in a bear market or a downtrend, they're going to hit the lower band, pull back into the middle, lower band, pull back in the middle. 50 is sort of the middle of the bands. So take a look at some stocks that are in good trends, and you'll see that channel forming. So just a lot of things to know about percent B. Now, if each bucket is 10%, then a 30% move means you move 3 buckets. A 40% move is you move 4 buckets. If you look at percent B on a given day for the market, the spiders, the Qs, the composites, the Russell, if you move 3 buckets in a given day higher, and you have a Eureka or a Kahuna, that's a very strong buy signal for the market. If you move down 4 buckets in a single day, and you have a Phoenix and a negative Kahuna, that's a sell signal and panic. I don't use this enough. I'm going to talk to Praveen, who's now here, about how easy it would be on my bucket charts for each of the major indices to show how many buckets the index itself moved in a given day, because I think I'm missing this. I think that would be nice to have. It should be very easy. It'll be a thermometer. I just wanted to, let's see what else I want to talk about here. Oh yeah. Do the buckets work? Now, this was a bull market. One of these days I should update it. But I looked at an edge rater because it made such a pretty picture. I can do this real time, so can Sagar with his Q tools. That whenever I got overweighted stocks above the Bollinger Band, I didn't pull back much in an uptrend. But if I got overweighted to the downside in an uptrend, it was a bottom. It was a bottom. It was a short-term bottom. It was the bottom. It was a bottom. So in an uptrend, when I get too much to the upside, I expect a sideways market. In an uptrend, if I get oversold during that uptrend, it's buy, buy, buy. In a downtrend, it's the opposite. In a downtrend, when I get an overbought signal in a downtrend, the market's going to reverse lower. And in a downtrend, when it gets too much below, it's a sideways move. So you need to know what type your market is. But this is important if I'm looking for market reversals. Sometimes I get excited because we're 50% below, 60% below. Just throw in your mind, if we are in a bear market, if we are in a recession, it can always get worse. And this was the March 9th bottom. And what I wanted to show you, actually, this was not the bottom. This was the October. I got fooled by up here. This was a fake bottom in October. We had a little rally in October of 2008, but we got to 70% on October 7th, October 8th back down to 50%, October 9th, 70%, and then the market started to improve. And the point here is it can be extended for many days in a row. It doesn't have to reverse the next day. I got lucky on April 7th. This pie here shows you the percent of stocks that were down or below their midline of the Bollinger Band, all the stuff we have in Market MRI Pro. And you could see it can get pretty red. Edge Rater has a beautiful way of projecting this. And you could see from Ian's, when you get to this side, you start looking at this. To me, 26%, I'm paying attention, but I'm not necessarily bailing. 40, I'm easing up because it's going to reverse, but in an uptrend, it just means it's going to go sideways. This is where we've been, kind of a stalemate. Neither the bulls nor the bears are in control. And when you start getting big numbers here, you're getting the bears in control, but eventually it's going to reverse. Here's the market lows on April 7th. 76% of the stocks in the NYSE were trading below their Bollinger Bands. 53% in the NASDAQ, 79% in the S&P 1500, and 66% in the Russell 2000. That is what I would call a left shift. And I had enough conviction because of what else I'm going to show you to be a dick and put out the market is in, or the bottom is in. I'm not being a dick. I'm showing off the tools. But here's where we ended up on Friday. There's no signal here. We're 10% below, 9% below, 10% below, 14%. If you track it every day, clearly we've weakened over the last couple of days. You don't need my buckets to prove that. But there's no excess here. Bingo, bongo, bango. And there's method to my madness here. I don't often, I'm going to demo all this in Market MRI Pro. I want to give you what these signals are. I don't have the time on a nightly webinar, weekend webinar, to go into this depth. That's why this is a long meeting. But I think it's important that you have a chance to learn and understand what is in the tool and where it came from. So HDSI, again, I can't say enough about this program. And have I replaced it with Market MRI Pro? I wish I could, to be honest, because I don't, I hope it's here for a long time. But I still use it. And everything that we're going to talk about today, except for some of my scans, and I'll tell you what's different when I see it, are inside HDSI. Ian talked about the cycle of the market, okay? The fear, depression, the panic up to euphoria and down. And he created, and I was involved in some of them, signals to give you a sense of where you are in the market. So let's talk about those. The bingo, baby out with the bathwater. That's all that means. When does that happen? One could argue that Thursday and Friday might be baby out with the bathwater days, but I don't know. I don't know if they met the criteria. I don't think they did. You're watching CNBC, the market's down 800 points, everything is selling off. And the pundits that they're bringing are talking, yeah, this was a baby out with the bathwater day. There's some really great stocks that we want to buy, even though they were down today. That's a baby out with the bathwater day. We're throwing everything out. In a bull market, when I start to see bingos, it's time to start thinking that you might be time to be getting out. Again, a constellation of signals. In a bear market, they can get worse. You might see a series of them. But again, you start to look for other signs that the market's going to change. Here's the math. If you're your own coder, you can code your own bingo. Why bother? I've done it for you. The bingo here are these gray bars, and you could see they line up at times when the RSI is hitting 33.5. And that typically signals some type of a bottom, sometime a very short-term bottom. But I just wanted to draw my eyes to what's going on. It's not defining my direction. And I'll show you where it's at in Market MRI Pro. The bongo, this is my indicator. Robert Mikowski, David Steckler, David Gallardi, Manu Kapedia, Lou Powers, myself, Bob Meager, a little bit of help. Ian took us aside at one of his meetings and said, I want you to go develop a timing indicator with the stuff I've taught you. And so we spent a few months setting things back and forth, a lot of phone calls, and we settled on the bongo. There's two criteria, price versus a 9-day SMA, and three different Wilder RSIs in the order that you see them, the short one above the medium, above the long. The first time that both of these occur on the same bar, we're long. The first time both occur on the same bar, we're short. And it turns out it's not a bad trending indicator. In fact, one of us, Dave, was a money manager and he used it the weekly for timing for some of his ETF portfolios. So it is my filter for taking trades. I don't like to go against the bongo, although there's times that I will. I'll show you those. It's an effective buy-sell, I would say not signal, but opportunity signal. They're slow to develop, so it's going to get you out a little late, but you'll catch the majority of a move. Get you in a little late because nothing's perfect. In an uptrend, the weekly bond goes green. If I want to find stocks that are pulling back in an uptrend, all I got to do is find the daily bongo go red while the weekly bongo's still going up. I often trade before the weekly bongo turns if there's a green daily bongo, and I've got my other signals, and we'll talk about those. The bango, and all these are in Market MRI Pro. It's looking at major spikes in the NYSE, new highs and new lows. When you're at highs, a bango is probably telling you got some of that irrational exuberance to the upside. And when you're at lows, which I don't typically see bangos at lows, it's kind of the same thing, it's your irrational exuberance, but to the downside. And so, you know, this is a messy chart, but it's the stuff that I look at. I got my Hindenburgs, I got the bingos, I've got the bangos, which are signaling off the spikes and the new high, new lows. And I'm going to teach you about the Eurekas and the Phoenixes now, because these are all in the program. And yes, everybody gets the handout. It will only be posted in Top Down Trader. The video, I haven't decided yet. Depends if I say anything obnoxious or if I say bad things about anybody, which I would never do intentionally. I don't post them. Eurekas are our version of finding that follow-through day. And it uses advances to declining issues ratio, advanced to declining volume ratio, the ARMS index. There is a light Eureka and a strong Eureka. These are bullish signals in the market. When you get a Eureka, especially after a downtrend, that is awesome. When I get a Eureka after a bingo, I am getting excited because it's telling me something's going to go up. It's great. But if you get that Eureka after a major run, it's irrational exuberance. So you're looking for a Eureka at the bottom. That is our signal analogous to an O'Neillian follow-through day, which, by the way, we're programming into Market MRI Pro one of these days as well. The Phoenix, it's misnamed because the Phoenix, to me, is the bird or arising from the ashes. Well, flip that around. The Phoenix is the market's burning up. The Phoenix is the opposite of a Eureka. It's a extremely bearish day in the market. Again, all the calculations are here, the heavy and the light ones. So if you are going higher and higher and higher and you have a Phoenix, big signal. If you've fallen hard and you get a Phoenix after a massive sell-off, irrational exuberance, the market's going to turn. Again, you don't have to remember what's in it. Just learn what it stands for. April 7th, I'm no genius. I just have good tools. High-low jump is at minus 100. It don't get any more stretched to the bottom. Every time it gets down to this level, the market bounces. My stocks above the 20 in green, 50 in white, and 200 red were as low as they'd been for some time. That's a pretty good signal. My new high, new lows, extremely negative, the most they've been negative in a long time. I like that. I had a Phoenix up here. Well, that was a good signal because the market sold off. I had a Phoenix down here. What the? Well, I think that's April 7th. And that was the exact, that signal there, these bingo signals told me the market bottom was in. And then on the 8th or the 9th, we had a Eureka. Remember, red at the bottom, bad. Red at the bottom is a bad signal the market's going higher. Red at the top, the Phoenix at the top, that is market's going lower. A Eureka at the bottom is a follow-through day. This market's going higher. And then we have a custom indicator that no one knows what it is, called the DFib from Praveen. That is amazing at identifying market bottoms. And this is the traditional Zweig thrust signal that we hear about on CNBC. Well, I was calling it long before that. And this 13-week new high, new low had bottomed. Every signal that I have said we'd bottomed. I wasn't risking my neck. I was showing off. These signals work. And no, I'm not that obnoxious. I just fill this in so when you look at this afterwards, you could see those signals, what they did. So let's now go into Market MRI Pro and what I do. So the next couple of slides are gonna, well, I talked about the bongo already. Stan Weinstein, stage analysis, stage 1, we're doing nothing. Stage 2, uptrend. Stage 3 is tricky because sometimes it looks like stage 3 and it goes higher. So it's really stage 2 pausing. But stage 3, sideways move, stage 4, breakdown. Buy, 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 get out, get out, get out, chop, 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 hard, and these are Stan Weinstein's. So I figured I could basically mimic this as a timing model. He uses a 30-week moving average. I looked at various moving averages. And what looked the best was a 30-period WMA. I call the trend based upon the bongo. And so I built a timing model. So here is the stage 1, 2, 3, and 4. Stage 1 base, everything is chopping, so the bongo is not helpful. When I break out, the weekly bongo's long, the daily bongo's long, days of wine and roses. I'm pulling back in an uptrend, the weekly's long, the daily goes short. My pullback buy trigger is I'm long, and I just flip back to long on the daily. Topping looks like base, choppy. And breakdown's the same way I use the signals, just flip them around. So I built a timing model. So in Market MRI Pro, the first thing I do every day is I go to this page, I rank them by 1-day change, and I look to see what's working and what's not working. For such a lousy day, Thursday and Friday, if you look at the 5-day change, and these are the indexes down here, the only thing that was down more than 1% was the Russell, and it was up the prior week. It's the standard weighted in all the charts. I don't know if it goes more than that. So I use a standard WMA and I use a 30 period. And I use the W means weekly, but it depends on whether I'm a daily or weekly chart. I use it the same time frame as the chart. And I use it for much more than the indices. So it wasn't a bad week, but it was a tougher day. I watched the dollar, the volatility, and Bitcoin. I like to look at new highs minus new lows. Now, Praveen's going to change this. I don't really care about 1, 3, and 6 months. I care about 52 weeks. So I wanted to look at, show me a month ago, a week ago, a day ago, and today's, just to see how the trend has been going on these. But we fell down a lot this week. We're at 31. We were over 100 for days before on the new highs, minus new lows on the NYSE, and we're negative on the NASDAQ. On those Bollinger Band tools and percent B, if I look at just the S&P 1500, it's the same on the NASDAQ and the NYSE. What percentage of the sectors were up? Blue is the current day or Friday. White was Thursday. It shows you it was weaker. What percentage of industry groups are up compared to the prior day? What percent of stocks were up? And what percent of stocks are above the midline of their Bollinger Bands? All that information is projected for 3 different indexes here on a near real-time basis. You have to update. We like to believe our data feed is real-time. It's sold to us as near real-time. It can't be perfectly real-time because if so, I'd have to pay a lot more money and you'd have to pay more if you're a pro. I think there's a small delay built into our time, even though it comes to us semi-streaming. We don't stream it to you. We let you update it as much as you want, and during the day, it's a quick update. It changes really quickly just by hitting the circle. It doesn't matter in what view you're looking at. Down here are the S&P 500 sectors. And again, on Friday was a defensive day. Staples, energy, and healthcare were up at the top. Communications is actually pretty defensive. Dividends, you think of Verizon, which had good earnings. Even AT&T was up. What was weak was technology and materials. We haven't changed the themes in a while. I've got some ideas for some additions, but I like looking at themes. Telecommunications was the leader to the upside. The only other theme positive was oil exploration. That was a horrible day on Friday. And then if I flip it around, I can see what themes were weak. Silver, gold, copper, uranium, metals and mining, lithium, video games, blockchain were all down 3% or more. Solar, semiconductors, social media. On my video, I said it felt like a liquidation day. I think people got margin calls because of their silver and gold. And I think people were selling off everything that was working so they could pay those margin calls because everything got taken out and shot. Um, I would expect a bounce on Monday just because we had this big sell off on Thursday and Friday. I don't watch anybody else's videos until I'm done with all the things that I present because I don't want to be colored. But I download and one guy says, "Oh, we're going to have Black Monday." I don't know. I think we've sold off a lot already, and I think if Monday, frankly, opens down a lot, I'd probably be getting ready to buy because we're going to trigger the 13-week rule, which I'll talk about in a few minutes if the market sells off hard. Very valuable sheet. The next thing I go to is the timing model. I look at weekly, monthly, and daily. Spiders, Qs, diamonds, and Russell. I actually like the implementation as much in Metastock. In Metastock, it's the same thing. You have bongos at the top, and the bongos reflect the time frame. I have the 30-period moving average, which reflects the time frame, and then I have the signals on the bottom. In Metastock, they give the signal. They don't give any repeat signals until it goes the opposite way. I'm not sure which is better, but they're both good. So far, there's nothing you can't do in Metastock or TradeStation, or frankly in TradingView. I've got all these things and all of them the same. I haven't gotten to the scanner, and that's where it differentiates. So I just look here. Weekly's in a buy, Qs are in a buy, diamonds are in a buy, Russell's in a buy. As I said in my video last night, none of them are broken down. Yes, this is a shooting star. That's worrisome in a sideways move. I'm not sure that's broken down. We are right off of all-time highs on all of these. Here's the spider. It hit an all-time high this week, I think. Russell hit an all-time high last week. Diamonds hit an all-time high a couple weeks ago. How can you short this market? You might be the biggest genius and be right, but I'm not shorting this market yet. I'm raising cash, which is not being short. It's being pragmatic and safe. But that tells me a lot. Now, if the weekly's long, I bet the monthly's long too. We have a issue here. So if you see something that doesn't make sense, it's overwriting, not going away. Just hit that, clear the X. Praveen's on it. The next release should fix that. Monthlies are all in a buy. So let's go look at the daily. The daily is the problem. And the daily got worse on Friday because we've now gone to a sell on the Qs, a sell on the diamonds, and a sell on the Russell. So let's look at the weight of the evidence. Long-term monthly says stay long. Intermediate term weekly says stay long. The daily model says be careful. Now, before the weekly is going to go to short, the daily model is going to start getting short. So I don't know if this is just a pullback, short-term pullback, or as it will be a change in direction. So now I'm going to rely on other tools to help me figure that out. But I am now concerned because I lost 2 more daily ETFs. So we are in a, at minimum, pullback in an uptrend. Now, if I want to be a cynic, we've stalled out on all the indexes and we're probably rolling over and going to new lows. I mean, I think that's very possible. But I still have weekly buy signals, so I'm careful. So the next thing I will sometimes look at the guppies. And last weekend, go back and listen. Now, somebody actually, one of you last night put a very nice comp thing on the YouTube site. And if you like what I do, please go hit subscribe on YouTube and put comments because I'd like other people to get exposed. put a comment about how I was right when I talked about the high jump and during the week, and somebody came in and said, nobody's a market god. I'm not a market god. I am a human being. I try and give myself and you an edge. Well, last weekend I said, look how far the Russell, all right, has gotten from its moving averages. Not sustainable. Of course, the Russell pulled back in. It got too far extended, not rocket science. I then will go into the index ETFs. And there's not a whole lot of things you do on this one, except look. This enlarges them. This updates them during the day. It updates all of them at the same time. I've added, because I'm a sucker for Mike Webster, who I think is brilliant, an IBD fame. He uses the 21-day EMA, so I threw it on my charts. And then I realized that slide, Ian, he was using the 17-day simple. It's almost exactly the same as the 21-day EMA. But because IBD uses the 21-day EMA, I thought I'd put it on the charts and see if it helps anything. I've added the 100 in purple because more often than not, some of our recent big pullbacks have been captured by the purple, which is the 100-day. The red is the 200. I think this is undervalued. It's showing you in green 10-year seasonality. And I got to change the colors. This is 5-year seasonality, and this is all-time seasonality. It's giving you a price prediction based upon the past, telling me that the index is probably going to go a little bit higher. And then what I've been talking about in the middle of February, we probably sell off or we pause. That's just what seasonality tells you. Is it voodoo? I don't know. I use it all the time though. I've got my high jump, okay? High jump was 100, we pulled back. Small pullback, high jump was 100, we pulled back. We're not 100 right now. Just click on the bar. High jump's only 48. We've already pulled back. It wasn't 100 here. I don't necessarily think we're done going higher. I'm just saying that, but I've got defensive because I don't know for sure, and I ain't playing snakes and ladders here. All right. I look at where we have a doji sitting on the 17 in the middle of a pullback. That is an indecision bar. I would not be surprised, like I said, if we open lower and close higher on Monday. Who knows what Monday's going to do? You got me thinking we might end up bouncing early in the week, and you got that one guy, Ron Walker, who is very bearish and thinks we're going to have the black swan day. We might. I look at moving average, I look at candlesticks, I look at prior support and resistance. Down here, I have my dots. I don't know how meaningful they are on the indexes. I have them because I still like to play. The OBV turned down below the moving average. I don't like that. Again, is this going to roll over or not? I don't know. So I will look at each of the indexes, and they're pretty much the same. You had a couple of days pulling back and touching the 50 on the Qs with long tails on the bottom. The diamonds long tail didn't quite get to the 50. The Russell broke through the 17 and the 21, well above the 50. Natural place. How you add all three? Okay, yes, Scott, I'll show you that right now. I'm watching the questions. Let me just finish my train of thought here. How I added 3 seasonalities. Let me go to a junk chart. It's not a junk chart, just a chart that I haven't done much with yet. And let's just make this big. And I want to add seasonality to whatever FR is. I go up into the indicators. I find seasonality. Oh, and I never remember where it's at, but it's somewhere in here. You don't have JP unless you bought his stuff, so don't think you're missing something. Somewhere there's seasonality right here. Once, double click. Twice, double click. 3 times, double click. I should have just put 3 seasonalities on. I don't know if I did. Let's take a look. I open up the configuration. I see seasonality 1, seasonality 2, seasonality 3. So in seasonality 1, I am going to make it 5-year seasonality, and I'm going to make the color white. For seasonality 2, I'll make it 10-year seasonality, and I'm going to leave it yellow. And for seasonality 3, I'm going to look at all time, and I'm going to make it purple. I'm going to hit O, and now I got to do one other thing. I have to decide, do I want to start seasonality at the last bar or year to date? I don't like the year to date, so I'm going to do them all from the last bar. But other people may like year to date. I'm going to hit OK, and there you go. 3 seasonalities, 3 different time frames, all done for you. Easy peasy. I think so. That's why we do these videos, so I can get you to think so too. Keep the questions coming. So somebody asked me about this. Obviously, there's no earnings on the Russell per se, but on a stock when we release the next issue, you're all going to get earnings dates. I have asked Praveen to give me percent dividends because I like dividends, and he gives you days to next earnings date as well. What else is there on these charts? That's about it on these. And I look at the major indexes, and I look at the VIX for volatility, and I'm really wondering about why this is happening. VIX is going higher. Oh yeah, look at VIX seasonality. I think mid-February could be a doozy. All right. And did anybody pay attention to the December inflation data? Notice how, and I'm not political, and I'm certainly not extreme on either side, but no one was out beating their chest about over 5 or 6% inflation on a monthly. That means we're back to Biden era inflation if we believe the December data, which is late. I think the eyes on inflation are going to get very tight. And UUP has a problem. And just to show you what I mean, because I used to use UUP for the dollar, and the problem was distribution, and it makes my chart look bad. So there is a signal called DXUSD, dollar futures. It doesn't have the distribution, so I changed mine for that. All right, that doesn't take long. Then I go to the commodity ETFs. And there's not a lot to add to these charts, so I'm just going to look at them very quickly. Climax run, I think so. This was a nasty day because it got a lot of people stopped out, and I got feeling they bought back in, and boom, gold. Can it go right back higher? Well, it did it here. It ended up going higher after this. I just think it needs some time to heal. I don't think it goes up right away. Silver, you don't drop like this and rebound. I mean, 28.59% drop in a single day on massive volume. Silver is probably done for a while. No, don't know that for sure. If we're lucky, it will give you a little bit of a base. See this big run up, and then it had to digest a sort of cup and handle, a breakout and a big run. Maybe we'll get that down here, but I'm not chasing silver here. Oil is broken out. This is interesting, and seasonality is not too bad right now. Natural gas, talked about it, is broken out, but from a low number. And then I look at the 10 and the 30, which haven't done much. I think this was probably the most important thing on Friday was despite the inflation data being god awful, a Fed head that I don't think Wall Street was as happy. It was part of the sell-off. The strength in the dollar, the fact we're going into a weekend, the fact that we don't have a budget approved, although we might get everything but DHS approved if the House signs off, I think is why we sold off on Friday. and the fact that the long end of the bond curve, the 30-year was only up point. I who do I mute all? Okay, as long as I'm not muted, we're good. I don't think I'm muted. So I think that was actually a very positive thing that the 30-year didn't jump, because the Fed doesn't control the long end of the yield curve. The smart money does, and believe me, the guys that are controlling the bond market are a lot smarter than me and you. Then I go to my buckets. What is my market breadth doing? I already said, we built up some below, but it's not to an extreme. The market's weak and there's no signal. I don't waste my time spending time. Market breadth. This is different now. Okay, so let me show you something. I have now added, I've got some of my timing signal data from the past. In wealth charts, you have to do your work. It's below, it's red, it was a sell signal. It wasn't a sell signal until you had green and above the moving average. I talked about this. All right, if you own wealth charts, this number here, let me find it where I can copy it. Bear with me. Because whenever I do these videos, people ask me, I want your layout. And you can have my layout. But I made it easy. I just got to get to it. Give me one more second. I'm flipping through things, getting caught up. All right, we're halfway through the slides. We're not bad shape. I am going to put this number in the chat box. If you have wealth charts, Market MRI Pro. Just doesn't work in wealth charts. I wish it did. If you have Market MRI Pro, all you got to do is find the right thing to hit, is go into hamburger menu. Okay. New layout. Type in that number right here. Put the name you want to call it. So let me do that for you. I'm going to type in the shared ID. Well, I think I better type it in. It's 97725. And why didn't it print? Because I'm doing something. Make sure I'm 977. All right. Why is it doing? Let me put the new name here. JS test. Sometimes it's me. Because I'm putting it in the wrong place. Dumb. Sorry, guys. I should know my own program, shouldn't I? I never input somebody else. 977. All right, so it's got to be a copy and paste. So let me kill that. Delete it. Let me go into the chat. Copy it. Let me paste it into enter shared key. Paste. Praveen, what am I doing wrong? 977-7-2-5-2-6-8. It's giving commas, which I don't want, so I'm taking the commas out. But it works when I'm not doing Zoom. 2-5-2-6-8. Well, without the commas, if I hit copied shared, it would be opening up a new layout over here. But guess what? The commas don't matter. I just opened up a new layout. I just opened the layout up here. You can tell it's new. So that's all you got to do is take those numbers, go to your settings menu. How much of a genius is Praveen? And this is all my trading mind and his programming ability. And his friends didn't even know he knew how to program. Thought he was a boss. Enter the shared key, hit copy shared, and you can open up. So those codes, by the way, are in the PowerPoint. That's where I went and copied it from. So market breadth is my favorite place to go. And this is the version with a little bit less on it. I haven't decided which one I want to use for regular. This doesn't update immediately. The Hindenburgs will trick you. I got tricked on Thursday night. It fired on the NASDAQ because it came in late, because it's requiring a lot of information that's constantly being redone and resent. But NYSE, huge uptrend, right up my trend line. Here is the past highs. Here's a false breakout. The number of new highs over new lows, is it a lot? I had to scrunch up. No, it's not a lot. Scrunching up gave me more days to see more information. All right, let's go back to where we are. I look, why is that? Mute all. Yes. You could see the new high, new lows, how they've been so strong on the NYSE. You can see the AD line, not so much. The up-down volume, not so much. You see the Hindenburg omens. You see the Bangos. Here's that Zweig thrust. What I don't see is telling me a big story. I don't see a Phoenix. I don't see a Eureka at the highs telling me irrational exuberance. I don't see any other thing that's got me worried. So I am vigilant. I am aware. I am looking at support and resistance. And I am acknowledging in my mind that this is probably a continuation pattern on both of them and we're going higher. But I'm aware with my short-term sell signals to watch these lines of support. That's all an edge can do. Now, if you go back, a Eureka, not at an all-time high or getting in market went higher. There is your Zweig, and all you do is highlight them. There's the defibs coming off the bottom. Your Phoenixes, your Bingos, they're all here for you. Ratio charts. I'm going to play with something new so I don't mess up something I use. Let's just do layout test. And I'm just going to do one chart. I'll keep a scanner, put the scanner on the right-hand side. And it's only one chart. I don't need to worry about sync. I'll create a layout. Should open up here if I did the right thing. And knowing me, just when I think it's not going to happen, it pops up. Okay. If I type in, let's type in Bitcoin, BTC. I can create an artificial index by hitting a plus and adding one after another will create an artificial index. It's not what I want to do. I could create a ratio chart by hitting the divide sign, and then let's compare that to the spider. Now let's hit, there is a ratio chart of Bitcoin versus the spider. You can do whatever you want with it. You want to put a timing model on it? I don't know if you've recognized this tool here. You can create a template. So let's do my market timing model. Market timing with the 21-day EMA. Actually, that's not the one I want. I think I want this one. And now I'm just going to add all my junk to it. Yeah, it's not the right one. It's not what I wanted. But basically, I could add all my indicators to it. So Pat just asked a question. No. All right, so if you want to create an index, what I do, I'll show you how to do one right now. Earlier this morning, I'm answering user questions if you can't tell, which is great. That's why you do it live. I created I named something the HGSI Top 50. Those that know HGSI know, and I'll just show it to you, that every time you update it, it's going to create a bunch of watch groups. All right, where is it at? When it's not showing up, it means it's somewhere else. There it is. Oh, come on, you won't come above. All right, it won't show on top of everything. Well, it has something called I call it the top 50. Every night it shows the best 50 stocks. If you create any list of stocks, Pat, and you want to see the index, you just go over here, far right, click on that, and it's going to create an index of all those stocks. So I never do plus, 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 plus. I don't have the patience for it. All you got to do is put the stocks that you want to create an index on, and you let the program do it for you. Those that went to our meeting in October, we created the Praveen Index to let us know when the market died. And the idea is you take the leaders at a top, and when the leaders roll over, that's typically the end of the market. And clearly the leaders have broke down from here to here. Guess what? They haven't gone anywhere. Again, maybe we don't have that big sell-off coming. I would use that as a mitigating point. So we looked at market breadth. The ratio charts, I created one. We have a problem with XLU that I can't fix. The data provider fixed the data on the, I think it was a split. They fixed the data on the daily, but they didn't fix the data on the intraday, and this is looking at an hourly ratio chart. But I want a short term. If you're pointing up to the top like communications, energy, staples, kind of industrials, you are strong. If you're pointing to the bottom, you've weakened. The big banks weakened, not the regional banks, interestingly. Technology is weakened, healthcare has come off, discretionaries come off. Just a high visualization of what's working right now. Seasonality, I made the comment that I'm not convinced that seasonality is as good as it used to be. And that's maybe not a fair comment, but it's how I feel. It used to be Priceline, Netflix. You could look like Intuitive Surgical. You knew the right time of the year to look like a genius. And it's all just knowing the markets. So we built seasonality in here. You can look at an individual stock, show you the whole year. You can pick what's the best stocks to buy on a given day based upon seasonality. I've set high parameters. I looked at the month of February. Let's look. RS is one that came up, and this is Reliance Steel. Obviously, steels are doing well. They didn't even get hit that bad. And if I look here out at, say, 45 days, it's up 80% of the time with an average return of 9.75 days. 40 days, 80% with 8.28. It's okay. It wasn't that exciting to me. I'll spend one video on just the seasonality. I am not a fundamental guy, but if you are, figure out what symbol you want. Let's just put in Microsoft, you dog. And here you have the fundamentals. You can pick, do you want annual, quarterly, trailing 12 month? So they're built in. I don't use them. I created a advanced market breadth tool. I'm trying to collapse them to one. The tool that became the most useful to me, which is on the one I shared the link with, is this green line. This is a 13-week new high, new low. Why nobody uses this anymore, I don't know. It was invented by Warden, and no one knows what stocks they look at, so mine will never look like theirs. They're proprietary in that. But we created an indicator that looks at the number of new highs over the total of new highs minus new lows at 13 weeks. And it's like a frickin' thermometer. If it gets below 0.05, the market's going to reverse. Let's go back to April. In fact, why do it that way? I got to just come up here, and I want to go to April 7th. Now, whether it's right or wrong, and feedback is always helpful, we center the date in question. So this is April 7th, somewhere in here. What's my high-low jump? My new high, new low, it's 0.2. Look at how low in the next box my new highs, stocks above the moving averages are. And then you look at how low the AD line is, and the RSI bottomed. There's a constellation of things that occur, but the one that's the most meaningful to me is that new high, new low. And when you get to tops in the market, that thing will shoot up closer to 100. How do I add the chart at the top of the way you have it? I need more explanation. Ah, James Clark. That is a great question. It doesn't update during the day, so I think it's end of day. That is a great comment. Praveen, I don't know if you can answer if you're watching or not. I see your name. I would rather have the new high, new lows calculated off of the new highs anytime during the day, not the closing day. That's probably what you're doing. If you're listening, can you paraphrase? And if not, James, I'll try and get Praveen to put an answer in Top Down Trader. Thank you for asking that question. That would actually matter quite a bit. Great question. And then I just build for play on this thing I call sector timing non-ratio, where I basically combine the timing model and the things that I look at on the stocks into one. And I'll look at not ratios, but here's Bitcoin clearly breaking down. And I got a lot of stuff here. I got the Bongo daily and a weekly saying downtrend. I've got the yellow line, which is important for my timing model. I've got sell signal. I've got the relative strength versus the spider, and I have my dots. So clearly this is not something I want to buy here. I like the fact it closed higher than it opened. And let me just review something very quickly here. John Person and I have different feelings about things, which is totally fine. He likes red and green or red and blue candles. All his candles are closed, not mine. An open candle means I closed higher than I opened. A solid candle means I closed lower than I opened. White means I was up on the day, and red means I'm down on the day. This is an open red. I closed higher than I opened, but I'm still down. This is a closed white. I was up, but I closed off the open. That's how I use candles. And I'll actually go through, I won't do it right now because I did it on the weekend, each of the sectors and see which sectors are looking interesting. And again, I got the buy, sell, I got my typical things. There's a lot of sells here on sectors. In fact, this one just broke down. What is this? Technology. All right, technology was weak on Friday. Discretionary really hasn't broken down much, still above the 50. They don't look good, do they? Something will look good, I promise. And, oh, I hit the wrong arrow, my bad. Communications is broken out. That looks really good. That's super strong. They led on Friday. Here's what was happening, in case you're wondering. You can't just blindly click because sometimes, and I have no idea why, the arrangement switches a little bit. So here's industrials, high base, still strong. This is financials, weak. Here is energy, strong. Materials pulling back, but still in a buy. And there's energy, which we know has been strong. So I didn't pay attention. All right, we got to be on the button. And there's real estate trying. It's above the signal. So I'll go through these every night and see which ones look the best. Sometimes I'll look and see if any of them have a double momentum signal. And then I did the same thing, and again, I'm not introducing anything new, on the for stocks. And I really like this because I want to rapidly go through certain stocks every night. And so I basically start, whoops, come on. And I look at each of the mags. So Amazon's got earnings this week, neutral. Apple trying hard, like it above the 50, but it okay after earnings. Google's the king of the market right now. Meta had great earnings. We'll see what happens. Netflix sucks because of the takeover deal with Warner Brothers. Tesla, I don't know, you're getting rid of the X's and the S's and you're making robots? I thought you were a car manufacturer. Um, and then we have NVIDIA, which I thought was going to go sideways to its earnings. Earnings are another week away. And then Mr. Softy, which just died. If we forget these days, that's the trend line. I thought that was kind of funny. Kept the same trend line, just cost me some money. I like looking at biotech. Biotech has pulled back to danger zone. It's holding at the 50, but a break here. I've trimmed and trimmed and trimmed. I'll be zero biotech if it breaks and closes below that 50. Pharma also has broken down, but I saw some strength in a couple of them when I looked at them. Data centers, it reversed. It's done this before. The question is it going to come all the way or is it going to go higher? So much of the market, some of the utilities like CEG, the uranium stocks, the things that support uranium like Oklo, LEU. Silver is a data center play. Copper is a data center play. Memory chips, SSDs, optical fiber, powering them. I mean, there's so many companies that keeping them cool are involved in data centers. So I've been playing data centers, but they were not happy at the end of the week. And then I got into HWM because of the breakout on the ITA, which is the aerospace and defense ETF. And heck, why would I want to stay in it? It's pulled back and gone to a sell signal. But I got put, so I have time to decide what to do. So that is, believe it or not, what I do each night for market timing. Can I have it? Yeah, I could put it on. If you want us to add seasonality for the next 30 and 45 days, I think what we'd have to do is create the space for 30 to 45 days here, white space, that we can plot it. But we can do that and we could come out with a layout that has the seasonality already pre-programmed. Not hard for me to do. We jump back to the PowerPoint and just make sure I've covered what I want to cover. So I showed you the heads-up display. This is a Metastock chart where I'm looking at what I do every night, looking at the ETFs of the market. Commodities I look at. The market breadth, this is the other version of the market breadth. So let me just stick that in because somebody's going to end up asking, and even though it's going to be in the handout that you all get, nope, it won't let me copy it. Never mind, I'll type it in. 320-342-635. I own a lot of programs. This is the best way of sharing things I've ever seen. Genius. Not my genius, although he's my genius because he works with me. The buckets we talked about, the sectors and industry group. I showed you a little bit how I did the timing model. This is Metastock. Where can I get your layouts for Metastock, Brad? Just email me, marketmripro@gmail.com. You can have them all. Sector timing model, this is the same that's in this. This is sitting in Market MRI Pro. The ratio charts I showed you. And now I want to talk about finding the stocks and what I look for in the stocks. Stock selection, when the wind's at your back, you attack. The wind is not at my back right now, so I'm not that excited about the market. So when you open up the JAS layout, and I'm going to go over my indicators, because I don't care which platform you have or you make your own. I use the same indicators wherever I go. So I'm actually going to jump back into Metastock. My chart demystified. This is Market MRI Pro. On the top is the high-low oscillator. It runs from plus 100 to minus 100. Somewhere around 95, it becomes the no-buy zone. Somewhere below minus 95, it's the no-sell zone because I've extended and I expect a reversal. This is the bongo, that trending indicator. Daily on top, weekly on the bottom. This is the body of the chart. I have in green the 17-day, in white the 50, and in red the 200 simple. If you want to go and add the 21-day EMA, because Mike Webster does, like I did, go for it. But I showed you it's almost the same as the 17. I keep forgetting to tell you that we have a similar to but not exact relative strength calculation like you see in certain magazines and newspapers. And it's relative strength, and we're plotting relative strength on the same chart. This is the stock price column. This is the relative strength column. So it tells me what the relative strength was today. I just have to look at it here. If you want to find stocks where relative strength is leading price, which is a great thing, you look at the chart. If I want to know the relative strength today, I just have to look at that. That is not in Metastock. I'm going to point out what's not in other programs. Here are my 10 signals. It starts with a green candle low, red candle high, which is a single candle reversal. Then I have not, which is from David Elliott, by the way. I will give kudos. The Wilder PSAR is not my signal, but if millions of people over the world look at this signal as a buy-sell, why shouldn't we test our signals to see if they agree with us? The third one up is the squeeze. I don't want to buy when it's squeezing. I want to buy when it comes out. So we have 3 dots after the squeeze called release, which I can scan for both of them. I then have my dots, momentum, which is a combination of the kahuna and direction, breakout, which is David Elliott's mobile breakout, volume, which is a derivative of Morales and Katcher's pocket pivot, looking at just the volume signature. And then they have a great gap called a Bible gap up, but I don't like it when it finishes in the bottom of the range. So I have my big gap ups, which is a derivation. They're all told you here what they are. Then there's a blank spot, and then we have the EMS, which is the EMS signal on wealth charts, and it's the next dot up on Metastock. And then the CPR is another system that is not in Metastock. It's in the other tools that I have. I'm going to probably add it to Metastock. I just forgot it when we built it. So as it says here, at work, I used an EKG whose impulses gave me information about a patient's cardiac health. These dots give me the general health and the ebb and flow of the market and can help me find my setups. Then I have what I call my supporting characters. I do a ratio chart in green of whatever we're looking at versus the spider. I stick a moving average on it in yellow. And when it breaks above the moving average, it tells me my stock is demonstrating strength beyond what the market is doing. When it breaks below, I don't want to be buying something that's underperforming the market. And then this is similar. OBV is in white. Yellow is a moving average, and I'm looking for crosses above or below. That is wealth charts. No, excuse me. That is Market MRI Pro. This is Metastock. They made it easier because they actually numbered them for me. Metastock does something I can't do in Market MRI Pro. I'm able to program the weekly signal. I'm sure Praveen can figure it out. But we have the weekly and the daily relative strength on the same chart. And it's easy to figure out that the daily is going to turn positive typically before the weekly. And here's the Metastock without all the writing. And I got the same setup in TradingView. Why? Because some people have other people's indicators they bought, and TradingView is a place where you can combine things. I talk about my relative strength and OBV as best supporting actors. To me, they're main characters in my stock selection, but I'll call them supporting actors. And then divergences are helpful. I use other programs for divergences. You can see them when you got them, but Stock Finder, which is an old program, gives me a list of those every night in the S&P 1500 that have MACD divergences, and I've got a layout in TradeStation that does the same thing. I'm not going to go through these because you're getting the deck, but it tells you what the bid gap is, the bid volume, the breakouts, and the momentum. The high-low oscillator, I give you the math. I told you how I use it. Metastock's got some great things in it, and I don't want the Metastock guys to feel left out. And you'll notice I do some of Sagar stuff too. But for example, I looked at my momentum scans in Metastock. I ranked them by up-down volume to see which ones were positive. And I was looking at them, and I didn't get very far because this one, which is BRX, is very interesting to me. We are in a short-term uptrend. The daily and the weekly bongo are long. We are not extended. We are broken out here off of a trend line. The EMS is positive here. I've got volume, breakout, and momentum. This scan is looking for my double momentum signal. Out of a squeeze, my relative strength broke up on the daily. It's close on the weekly, and the OBV went up. This is a stock that we might want to look at working up for options if it's big enough. But I've got scans for pulling back and bouncing or breaking down on a trend line. I got pullbacks in an uptrend, which is the trade I like, and it didn't find. I should have found them. Where are they? Why aren't they showing up? Oh, because it didn't find any. All right, I got to go run that one again. Because I found something before. All right, and I've got downtrends, uptrends. So I've got all kinds of scans in here, which I find to be very useful. And the chart, they have a good charting platform, and I got them listed here. I don't need to go through them. Go back into the chart. Just want to make sure I cover. Actually, I'm not going to go into the chart. Let's talk about what I do when it's time to go look at the markets or the stocks. My A trade is pullbacks in an uptrend. I want to find it, I want to trade it, and I want to find the next one. And I want it to be wash, rinse, and repeat over and over again. So you need a trading plan. You need to know, what is your A trade? How do you find them? What's your plan? And how do you find the next one? This is an uptrend. This is a stock. Remember I said it goes from the upper Bollinger Band to the midline? A lot of them will look like this. I don't want to buy here. I want to buy right here. And I want to find those stocks that are doing this. All right. How do I find them? The weekly's green, the daily's gone from red to green, although I might still look at it if it's red when it hasn't flipped yet. Price is near support. It could be a trend line. It could be a moving average. It could be horizontal support and resistance. It has to have something to draw my attention. I look for my momentum signals. And then I want to know, is the market supporting it? And then these things are supportive. Squeezes, the relative strength, and OBV. What about bottom fishing? We're going to look at Deckers maybe. Deckers look just like this. Deckers had a huge move on Friday. Its earnings suggest a turnaround is in play. So we know what this is going to look like. It's going to have well off the old highs. It's probably below the 200. The bongos are mixed. I need a new uptrend, so I probably don't buy the break. I want to see higher highs and higher lows. I expect Deckers to pull back and then go higher. I have different patterns, double bottoms, fry pans that I might look at. I want my impulse indicators. And with Deckers and all other bottom fishing, there's no rush. I want to retest, not the first break, and I want my supporting characters. And then you can look at Darvis boxes, a sideways stock, and buy off the bottom, sell off the top, and be aware that they could break out or break down. Those might be additional trades. And then I have matching shorts. That's what I trade. I mean, all day long, and the vast majority of them are the A trade. So now let's go back to the platform. So let me show you the Metastock guy. You're not going to be happy with me because you don't have this side of the chart. You also know that you paid probably $5.97 for the Metastock add-on, not $26.95. We have now created I've not run the two of them together before, but let's see what looks like. Market MRI Pro. Continue, and let's let it load. The Market MRI Screener as a freestanding program that's going to do everything I do here. We are going to have it so you'll click and open up a trading view. On Metastock, at some point, we're going to have it so we'll have their symbols and probably their data feed, but I don't have that yet. So I'm really excited that we have that, because there are people that would rather pay $9.95 a year for the screener and get the trading view indicators with one purchase and just do that. Now, I'm fine with that, and I'll give you the layouts that I use for market timing and stuff. I've got so much more in this program than you can do with just those two that I'm happy to give you the things that you can do at no cost. So up at the top here are a bunch of standard lists that we keep. The base is everything the NYSE, the NASDAQ, and the Amex filtered for $1 and 150,000 or and 100,000 shares. It's usually about 3,800 stocks. There's 3,799. In a rip-roaring bull, we'll get up closer to 4,000, and in a bad market, we'll get closer to 3,500. I do not trade $1 stocks or 100,000 share stocks, but some people do. The weeklies are a list of weekly options that are traded, and then we have the components. The ETFs, very cool. There's 3,800 ETFs. That's not what's cool. Do yourself a favor and click 500,000 200-day moving average above the 200-day, no, not above, and $5. Hit OK. I'm down to 670. Click on this thing here, which splits the screen, and go find an ETF. Let's find data center. Much easier to find with this. And watch what happens. How would you like the components of the ETF on your platform without going to a website to find them? Why is this important? On the day that I decided buy data centers, and we talked about this, I think it was a live discussion. Why? Broke above trend line. EMS, gap, volume, breakout, momentum, relative strength going almost vertical, and OBV. That was a buy. All I had to do, because if I had the tool then, which I didn't, because I went and created my own data center list, is click on this. These are the components of data center. I think that's a wow. All right, so now I can just go through and I can look at the components of data center one at a time and see if anything looks good. Well, we know data center is weak right now, so I'm not sure anything's going to look good. So you can now, at your convenience, find your favorite ETF. And if you want to know what's in it, just hit the split bar, and then the next one you hit is going to populate down there. Let me go back to the base. I'm going to show you the reverse ETF signal. It takes a while to load because it's loading 4,000 stocks. So I'm going to give it a few seconds, drink some coffee. Good news is, if you've fallen asleep because this has gone so long, you'll have a recording of this before you go to sleep tonight. I think we're there. I think I have to take off my filters. 3,800 stocks. We were probably there 3 minutes ago. I forgot to take off my filters. That's why I didn't have the 3,800. Here's what happens with a stock. I'm going to put that split view, and I want to build a portfolio. I really don't, but let's pretend. I want to build a portfolio of stocks that look like ALAB. So I'm clicked on ALAB, and it's going to go find me stocks that are its peers. It might mean they're in other ETFs that they're included. They're all tech stuff. A lot of them have to do with data center and supporting it. but it goes out and it finds the peers of whatever you're looking at. Why? Because Ian taught us about wolf packs. And birds of a feather flock together, and so do wolves. And sometimes an entire sector is moving. On Thursday, I talked about regional banks. They fared pretty well on Friday compared to other things. We kill that right now. New feature. If you don't have it yet, it's coming out on the next release. I think you have it already. If you look here, you'll see several columns. The columns reflect the chart. Last change price. Boring. We all have that. Up means how many bullish signals. Verizon. 1, 2, 3, 4, 5 blue dots. I would argue the CPR on top should be counted too, so we may adjust that. All right, boom. So I just ranked them by the number of bullish signals. You're going to find a lot of things that are probably extended and can't be bought. Here's Decker's. I think that one looks interesting. Put this on a weekly chart. Looks to me like a pretty interesting place to break out. And so I just go through the list. That's one of the ways I'll look for. The next one is the number of down. WRN. Breakdown. These are all going to be breaking down stocks. Wheaton, Bancorp was a regional bank that blew up. Royal Gold. All right. I could look at age here as, let's say I want daily bongos up. The first age is daily bongo. So ITGR, the daily bongo, should be blue for a long time. How did I know that? Because its age was 55 days. Weekly age. If I look for -1, this should have just turned red. And since this is a daily chart, this is 1 week ago. And the weekly doesn't show as a single bar unless I put it on a weekly chart. If I go to a weekly chart, well, wait a second. It should be Praveen, is this, no, that should be +1, not -1. All right, we'll have to go back and check on that. Look at TSQ. Yeah, that's +4. We find another minus. That's minus, that's correct. Let's find another -1. Unless the weekly bar hasn't closed yet. All right, I'll look at this on Sunday night because it may be that the weekly bar hasn't changed until sometime over the weekend. That's probably the state because we're getting the weeklies fine. That's interesting. I never knew that before. So the week age and weekly age is the setting of the bongo. FM2, FM5, and FM13. I'm taking a version of Alex Elder's Force Index that neutralizes volume. What do I mean by that? Because volume is in Elder's Force. Yeah, but if I have a stock that has 1 million shares a day that moved $10 compared to yesterday, and I have a stock that trades 100 million shares a day that moved $1 from yesterday, which one's more impactful? The $10 one. But Elder's Force multiplies by volume. So that volume makes the $1 move look more impactful than the $10. So we look at average volume and we normalize volume, and therefore it's not manipulated is the wrong word. It's not maneuvered by the stocks that have big volume. These are 2-day, 5-day, and 13-day. Newsflash, I'm becoming increasingly attracted to the 5-day. All right, second one in is Meta. That looks great here. Look at this. Sitting on the 50. Are we on a daily? No, it's a weekly. Beautiful weekly chart. But I'm looking at 5-day momentum instead of two-day momentum. I'm finding it to be, in the choppy market that we've had, has been more useful. But you can rank on short-term, intermediate, or long-term. R value. If you want to see stocks with massive volume, you rank it on R volume. Well, here's a stock with massive volume. It's a bottom fish. If you go up here, it tells you what the company does, but it's too small or too new. We don't have the data. On a lot of the really teeny-weeny stocks and on some of the recent IPOs, our data vendor doesn't have it. Let's look at the next one. OKRT, another cheapy stock. So typically what I'd be doing here, I throw in a 500,000 minimum and a $5 minimum. And now I'm down to 2179. I'm not going to have that junk anymore. PMN, that's a huge move. It closed at the bottom. It's still a big up day, massive volume. Again, you highlight, tell you what it does. Oh, come on. You're not going to work for me today? All right. We'll find one where it works. Just the really young and cheap ones for whatever reason. But I could go down the list again and look for patterns that look attractive. That's what scanning is about. Ranking things in a way that's going to bring things that fit what you like to the top. And then OBV, if it's green, it means price is above the moving average. And the number of days tells you how long. We have a 1 here, which means it crossed above today. And on the relative strength, I have a daily and a weekly. So PMN on the daily has been above it for 17 days, but the weekly is only 2 bars above it. So these are all the elements on my chart. So why is that important? Because someday you'll do what Praveen does, and I'll see if I remember which one to click on. I don't do this routinely. I ask Praveen to set it up for me. I could come in here. I could say, show me stocks whose greater than or equal to $10, who have at least greater than or equal to 1 bullish dot, less than or equal to 0 bearish dots. That has to be greater than or equal to 1 bar bullish on the bongo. I want it at least 2 bars weekly. And I want OBV to be greater than or equal to 1 day. It's got to have positive. I want the relative strength to be greater than or equal to 1. And I'm not going to say anything about the weekly. I hit enter. I got 163 stocks that meet my criteria. Okay. At some point, and he may have already done it, it probably has. Let's see. We're supposed to make a way to save the name, and it's probably there. I just don't know what to hit. I just created a scan. Let's look at what I got. Let's rank them by the up dots. Robert Half International. I said last night something going on because this was up. Several of the publicly traded hiring and firing companies were up. Deckers, we looked at, big move. Colgate Palmolive, I mean, things in your medicine cabinet, things underneath your sink do well in bad markets. They pay dividends. How do I know they pay a dividend? Well, here's what it does. But you go over here, and you got a lot of information in here. It tells you 2.41% dividend. Last earnings were out January 30th. That's what they reported. The change, surprise. Okay. Thank you, Praveen. He keeps adding new stuff here. Tells me when the next earnings date is, what's projected. I think what would be cool, Praveen, is if we put in a different, maybe in yellow, what if they meet their numbers are, what the changes would be. We don't always get the revenue though. So this will save it. Let me see your note. You said icon before as of date. It's got a JAS web test. Awesome, awesome, awesome. Because this might be good. APD. That looks kind of interesting. It's breaking above resistance. Its earnings are out because its next earnings are not for 96 days. It violates a rule that it's not violating. It's got lots of blue dots, good relative strength and OBV. Remember, we have brains. Our brains need to learn when to say, that doesn't matter. A high jump of 100 does not matter if I am on, adjacent to, and near the 200-day moving average. The math gets messed up when you're in between, when you're heading up and you're in between these moving averages. It doesn't change anything, but you start to go flat. The moving averages all come together and it gives you a false signal. You only want to look at the high jump and the low jump on a trending market. This is not trending. Therefore, we ignore that. It's sitting on the 200. We ignore. This looks interesting to me. All right, next one. Milliken? I don't know what they do. Miller Knoll, not too bad. Reality, Realtor. All right, Flower Foods, boring, but defensive. Church and Dwight, big gap up on earnings. They make a lot of things in your medicine cabinet. So this is actually a pretty nice scan. Now maybe I want to take this scan and I want to add to it. Just, it's not going to change the scan. But I only want stocks that are pulling back in an uptrend by my definition with the bongos. Now, why did that go to 256? All right, I don't understand that one. All right, I have to learn more. But you can play around, you can filter it to your heart's desire. And I'm just going to clear all the filters. And now I should be able to drop down and find JS Web Test. Done this before. And here they are, 163 stocks that met my criteria. I think that's pretty darn cool. What I would like to do is add a lot more criteria. Spoiler alert, they're already there. I want to add columns. Let's see. You have a lot more columns. I don't know why that clicks when I go off to the corner. You have a lot more columns that are not being shown that you can use. So I think that is really cool. Praveen, I'm sure that thing there is because I got too many windows open and something is doing that. Whatever. I don't think it's going to impact on the rest of what we do. So you can add any of those other columns into scanning. I think it's super cool. What I just did is bottoms up. And what I can't help myself is during the day, if I can turn on my program and no one's watching, I drop down A+. That's the momentum scan in Metastock, except I don't have to run the scan. It does it on the servers. AX was one of the stock picks from last night that I liked a lot. Nice little uptrend, pullback, breakout, earnings are out, big volume, and it's a regional bank, and regional banks look attractive right now. I just don't like that it doesn't pay a dividend. BRX, guess what this one is? It's the one that I looked at in Metastock. What are we scanning for? We're scanning for double momentum. 2 momentum days in a row. This one's coming out of a squeeze, got momentum, breakout, and volume. It's got relative strength and OBV. Seasonality's okay, especially if you look at the intermediate term, not at the high jump. Well, I like both of those. The other scan that I look at real-time day is looking for pullbacks and uptrends, which is the A scan, my A trade. And Robert Half, it's hard for me to believe it's an uptrend, but guess what? The weekly's in an uptrend because it is in an uptrend. Here's where the red pulled back, the downtrend, new uptrend, a big breakout into the 200. I think that is interesting. And I think we just looked at this on the weekly. Looks interesting there. I'm not sure that we shouldn't be looking. There's a wolf pack because, watch this. Don't pay attention. That was the last stock. Click it here. And let's see how long it takes for it to bring up. It'll take a few seconds to find its peers. But it should be looking at the bigger directory. I've never done this inside of a scan. up. See if Merck does it. While that's playing, yep, it will work. I probably wasn't given enough time on Robert Half. But basically, again, here's other stocks that are like it. Korn Ferry, a little bit more attractive chart. So again, looking for companies that are in the same type of a business or business classification. A neat new thing that our buddy Praveen put in. Brilliant. Merck, I thought looked good as well. Nice uptrend, pulling back and breaking out. I think I know why Merck is happy. They came out with a list of drugs for 28, and Merck's big drug, Keytruda, was spared. So that means Trump hasn't identified it for a mandatory price negotiations, also known as 50% haircut. These are requiring the squeeze and the momentum, the relative strength in the OBV, and not being overbought by high jump and with a blue weekly. So those are great looking stocks. Here's the Korn Ferry, which we would have found anyways without doing what I did. Here's that bricks again that we looked at. So the scans are great for finding stocks. Show you some other things. The next thing, and again, if you're the Metastock, TradingView, and frankly TradeStation, they all lack on what I'm going to show you now. You may not know what this piece if you have the program. The default is those 3,800 stocks. Each one of them has an industry group and a sector assigned to it. So if I click all the sectors, I have 3,800 stocks. If I click all the industry groups, if I click one industry group, I just have a few. If I click them all, all right, click. Well, I'll get 3,800 when I highlight them all. Just took a while. So, all right, if I click on, for example, financials, I will bring up all the industry groups within financials, packed by my 3,800 stocks. The S&P sectors are looking at 500 stocks. If only large mega caps are performing well, you don't want to use 3,800 stocks for your top-down analysis because you're looking broad when the market is narrow. But what I could do, just remember 556, I could change the list. And let's just look at the largest 1,000 stocks in the market. The Russell 1000. It's already moved. Now I got 994 stocks. Now if I look at financials, I've only got 142 because I eliminated stocks that maybe I don't want to look at. If you think the market is going crazy for small caps, you can look at the Russell 2000. Maybe you want to keep it small. You look at the S&P 1500. That's why these are up here. So you could change what you look at. So if I look at financial services and I thought regional banks look good, I could create this, and there's a lot I can do with this. I can look at them. Praveen, I want to put create the index on the subheading here if we can. I would like to make an index of it to prove it, which we're going to make it so we can. Right now, I just have to do KRE, which is the regional bank ETF. But I can pull up and I can look at just those components. So what I like to do is I like to come in and let's just go back. Let's look at the S&P 1500. I like that. S&P 1500's got the biggest 500, then it's got 400 mid caps and 600 small caps. And it's a popular index, and therefore I know I'm not the only one looking at it. So I might look then, and these are going to change, by the way, by the components. So let's look at percent change, what were my best performing sectors. communications, defensive, and real estate, and then energy was close. If I look at FM5, I'm going to go with the top four here: communications, staples, utilities, and energy. Here are all the industry groups. On a short-term basis, FM2, I've now ranked the industry groups inside those four sectors. And now 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10. I can see here telecommunications, energy, renewables, beverages, packaged food, household personal, food containers, education, tobacco, and beverages. We are now playing defense. Those are very defensive. And then I could maybe come in here, go to my new scan because I think it's an awesome scan, hit OK, and take a look at these and see if any of these look good. Conagra Brands, let's leave this open so I can see their dividend. 6% dividend coming off the bottom, broke the trend line, retested, going higher. I don't like this here, but I do like 6.25%, something that's going up as the market's troubled. I'm expecting trouble. If I'm a money manager that has to stay invested, that looks good. CCOI, not yet. Church and Dwight, I'm not going to pay attention to the high jump here because it's right off the 200. But this looks interesting. Colgate Palmolive, boring, 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 but pays a 2.4%, breaking out. Clorox, boring, 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 but 4%. Comcast, not necessarily boring, 4.81%. Chevron, you got dividend 4.22 and a new growth stock. It just broke out of a long base. So this is how you do top down. Play around with it. Look at different. Patricia, I think what we need to do is hover over it and have a definition to explain what's in it. I think that would be the best way, or in the help file. So that's how I do top down. I come into the market, I've made my decision, am I bullish or bearish? And then I go and I look through the timing model, the buckets, the breadth. Then I come into top down, what's leading sectors and industry groups. I try and find a couple of picks doing it that way. And then I do the human factor, which is it's so much more fun bottoms up. And I just drop down my A plus, my A, and I'll probably come up with a name for this after I play with it because it looks really good. In fact, it looks really good. So I'm going to have to decide what to do. In fact, it looks so good that I have to do this. Why don't we show you how to create a new watch list? I'm going to do the 1.31.2026 scan. I'm going to hit enter and close that out. Showed up over here. I am now going to come over here and I'm going to highlight all of them. I'm going to right click. I'm going to add it to my 131 scan. Now I'm going to switch to my 131 scan directory. Oh, where are they? I must have done. They should come. Maybe they'll come while I'm doing something different. Let me go back to that screen. And let me just copy them. Now I got to remember which is which up here. I'm like all of you. No matter how much I use it, there's so many things you got to remember. But that should have. Why would that not do that? It should add it to the scan. Is it? Please tell me, Praveen, it's not one at a time. Because if it's one at a time, we got to fix that. All right, I don't know why they're not coming, but what I was going to do, I was going to add them here. Let me go back. And Praveen, are you noticing something that I'm seeing? this disappears on the impulse. I need those back because I can't even copy this scan to another file without having those tools back. So we need to add those tools onto this. But what you could have done and what you'll be able to do once we make those little adjustments is you can create a list and you could then come down here and create your index and see if that's a good list and a list that you, all right. What have I done? When things don't work, it's almost always my fault. Try that again. Yeah, there's 422 stocks in the high relative strength list. You can create your index. So my goal today for this part, and then we got the optional part, which will start after a short break, was to show you parts of the tool. I got one more thing I promised somebody I haven't done yet, that I haven't done. Show you how I use the tool, the different layouts. I share with you my layouts, some of them that you didn't have. You'll get the PowerPoint. I gave you the justification and the background on the different signals that I use. I had a question that I want to cover from before we started. Jeff, how do I know that these signals are meaningful? Is there a way to back test them? And the original question, I think I liked it. I liked the original question was, can you repaint your A plus and your A signals back on the chart so I know when they occurred? We could probably did that, but that's not what we did. What we did was, let's take McKesson. What we did is we said, all right, the best question of whether this works or not is, let's pick a date. Let's go to May 1st, 25. And what I'm going to do is I'm going to rescan, but use that day for the data. Click this, and it just reset my data set. We're just looking at the S&P 1500. I knew that, Praveen. I was trying to build the excitement. So now I've got the signals from May from wait a second. Why does it say? Hold on a second. I wanted May 1st, so maybe I did something stupid. May 1st. Okay, it says May 1st. Let's pull out a stock. Let's go into here. Were there any A pluses on May 1st? There were none. Were there any A's on May 1st? There's not going to be anything here until I pull off the A plus. Interestingly, there were no A's or A pluses on May 1st. All right, let's pick another date. How about November 30th? I'm in October. I'll pick October 22nd. We'll run. And let's see if anything shows up in the scan. Pega. All right, so here it didn't work. Okay. Now, but what you have is the ability to start looking at the signals and decide if the signals were any good or not. Now, there's something missing here. And what's missing is the market. I'm not taking buy signals in a bad market. So I might have to go back and look at this date to decide what was the market doing. And that's why I think we didn't paint the signals on the chart, because of the importance of the market. So right now we're in a toppy market. But if I was to go back into April, and I haven't pre-tested any of these dates, so as far as I know, they're all going to be bad, and look at April 15th, kill my filters. Netflix, STRL. These are the signals on the day. I'm not buying them just because of a signal. Show me the bad one. The markets, there's one that was neutral. The wind is at your back. I know that's at your back. It's a week off the bottom. You attack. That's how I test my signals. But you gotta have the market into context. All right. Okay, I've got that. I got that. I think I've got your questions done. Back to the PowerPoint. So top down has been best for me. My timing model is designed to capture most of a big move, but keep me out of major downturns. It is objective. It does not repaint except before the bar closes. The weekly bar can flip-flop all at once. It's not closed until the end of the day, Friday. And the weekly guides my direction. The daily guides my level of commitment and conviction. My scans and explorations help me identify my favorite setups. Once I've identified a list of charts, I review them. Setup, support, resistance. The indicators and scans help me locate actionable stops, but it's the chart that guides my decision making, and I do not trade against a major trend. One other comment I want to make back on the chart. Is Kathy on? No, Kathy's not on. She'll watch it later. I've got this really good friend, was our neighbor in my last development, and her husband was my good friend as well. My hot dog buddy. We'd go for hot dogs for lunch. Piss off my wife, but I like hot dogs. And we had total opposite ways of taking a trade. Let's go back and look at Netflix. I take this trade the day it takes out my prior high. And if you watch my videos, you know what I do. I would look at that chart and I'd see the highs right there. I'd come in, I'd take a vertical, I'm in a horizontal line, put it on the high, and I'd write an order if and when Netflix trades above this amount, then I want to take a trade. Why do I do that? Because I'm not watching the chart. I'm working. And if it drops at the open, I'm not going to get filled. If it gaps up, so sad, too bad, I'll find the next one. I'm waiting for it to trade through my buy stop. If the stock candle is too big and it closed in the middle of the candle, maybe I don't want to buy that. Maybe that's a signal for me. So I'm buying when it goes higher. Kathy, love her. She put her candle, her line, knowing her, probably down here and wait for it to come click that line and head higher. It's different approaches. She would not have gotten filled. I got filled when it went higher. Different approaches. So when I look at a chart that didn't work, if it didn't work, I don't know if any of these didn't work, so I'm not going to go look at them. But if I look at a chart that didn't work, I care more about did it trade above my buy stop before it failed. All right. So as I told you, this is teaching, not selling, but not everybody has my package. I did raise the price, and again, I forewarned, starting in Thanksgiving. The new price is $26.95. Everything you've seen today. You also get my trading view indicators. And within the program, and I didn't launch trading view, so I'm not going to show you, you have this thing that looks like a TV. And when you click that, we'll see if it opens it anyway. It'll open up in trading view. It's going to do it anyways with my indicators in trading view. And I think that's important because there are things that I will never develop that you might want to use. So you get the trading view indicators as well. I'm going to do a webinar just looking at the program and the different windows and the different tools middle of the week on February 10th. It'll be posted in Top Down Trader. $19.95 is now the sale price. I had to raise my net cost. We were not going to cover our cost if we didn't. Annual maintenance starting year 2 is $495. If you sign up for top down, you get $100 off. If you own my wealth charts or my trade station package or my trading view package, you'll get 200 for each of them. There are very few people that own the trade station package. So there are probably some people here that will be down 500 from this. If you're not on Top Down Trader, you're missing my stuff all the time. Why would you do that? Or here you spend 3 hours with me. All right, I don't stop. I always want to help you. I don't ever want you to be the person that bought my tool and don't use it because you can't figure it out. I'm here to help you, whether you email me, the person with the meta stock, email me, you'll get my layouts. Live meeting Orange County hopefully will occur this year. I haven't had confirmation. I'll definitely do one sometime end of October, early November in Florida. And with that, what I'm going to do now, we're going to take a break and we're going to come back and I'm going to talk about options and how I trade them. I've spent 3 hours showing you how I use the tools, the indicators, the stuff that I learned from Ian, and hopefully you got some stuff you can use. I am going to pick a stock and we are going to figure out how we're going to trade it. And I'm going to talk about the options I use. So at this point, I'm going to start the clock for a break. And we're going to start at 1:05. So we will restart at 1:05. So if you want to go and take a few minutes, go grab a coffee or a bite to eat. I'll see you back in 15. If you want to go, because man, this guy talks forever and I'm done. That's cool too. I certainly understand it. And we'll see you at 1:05. But this will be recorded. I may or may not record them together, and there's a good chance I will probably not post the options on YouTube. All right, take that thing off here. All right, we will start at 1:05. We'll see you back. I am going to stop the sharing, so I pause the recordings, and I'll see you back in what's now 8 minutes. Actually, I'm going to keep sharing. I changed my mind. I'm just going to pause the recordings because no one can see that we're on pause.